imported for personal use, and a whole host of other measures. So I think the budget is sort of continuing a theme in that they want consumers to spend, but at this point, one can argue that there's now limited room for consumers to actually trade, because that additional tax is going to put a little bit of a burn on some of those stock market investors.
Well, let's see how that's put into action. So, Abha, the Nifty was 25,380 before the finance minister mentioned an increased tax on futures trading as also on options premia. And from then on, it's a single one-sided slide, now 24,962. So that's a fall of almost 400 points on the Nifty alone. And look at how the Bombay Stock Exchange has dropped, because options trading is a direct correlation to its bottom line, 9% lower. MCX is down, I think, 15-17%. It also has, the metal rally being taken off the board. Look at IEX and look at the brokers. Look at Angel One, look at Novama, look at so many other broking stocks. All of them now really in a very deep shade of red.
So if you were watching the markets actually, and Sakshi, I'll bring you in here as well, and she's made a whole host of announcements in line with expectations, even on the bond market, even on across the board, whether it be AI, whether it be segments like pharma, so on and so forth. But if you were watching the kind of progress of the markets through the budget, we were mildly up, I would say, through the host of spending announcements. She has stuck to the fiscal spending announcements. We are seeing huge allocation across the board, and market was gently up during that time, but they started losing ground just ahead of Part B. Perhaps there was some kind of inkling of what was to come on the STT.
Absolutely, Abha. So remember, when we were talking ahead of the budget speech, there was a whole lot of anticipation from a lot of our market experts that this is the right time to review the LTCG or to give some kind of a relief on STT. Bank comes a raise that's coming in on STT, especially on FNO. That clearly makes out that the government is very careful on what the investors are losing money on, and they want to protect the investors there. Over 90% of investors even today lose money when it comes to FNO, and there are stringent and more stringent measures that even the SEBI has been putting out, and now the government has put that additional STT tax, and that's why you do see the markets come down. This is despite the fact that there is an increased capital expenditure outlay to 12.2 lakh crore rupees. This is a welcome move. The government is also sticking to its fiscal glide path of 4.4% for FY26 and 4.3% for FY27 as well. Despite all this good news, this one knock on STT has taken all the good news away.
Exactly. We've got Mr. Arena with us as well. Mr. Arena, it's the STT that everyone is really just a bit shocked at in terms of why, and especially when markets have been going, really giving investors an opportunity to build wealth. And currently, honestly, with what's happening in the metals market and precious metals, and now with this, I think investors have a lot to kind of cry about right now. But let me get your perspective on all the tax announcements today.
Well, the tax announcements are excellent as far as the entire ecosystem of data centers, global, people coming in. The tax holiday provision right up to 1947, which is another 19 years, is an excellent step. I think India needs to grow that sector, and India must become the hub of data centers. Global data centers. So this is an excellent move. We never expected a tax holiday for such a long period of time. Secondly, the government has streamlined procedures for transfer pricing, for advance rulings. All this will help the foreign investors to look at India as the real center for global growth. And the whole object of this budget is to put India on the global map. And the best way to do it is to give them this tax holiday, which I don't think any other country has done. And I must say this to the credit of the finance minister. She's a woman of great vision. She has realized that this is the one situation where entire global data centers will be used, India will be used as a hub for them. And this will make India a tremendous global power.
Well, at this point of time, 2.5% down on the Nifty, 24,700 is what we are staring at. Sakshi, just 3 out of 50 shares are in the green as far as Nifty is concerned. And when you look at the 500 index, only 41 are in the green. Be that as it may, we'll just take a view from the broader tax community. Gokul Chaudhary, President for Tax at Deloitte joins us. Good afternoon to you, Gokul. A view that you might have on increased tax to be paid by promoters on buybacks.
So we are going to be closely watching the fine print as it comes through, because the definition of who's a promoter is going to be very critical. And I think equally it's going to be interesting to see whether in the case of foreign shareholders, whether the definition of promoter will even extend to non-residents. So I think it's going to be, I think it's a good move. But of course, as they say, the devil's in the details. Let's wait and see as to who gets captured in there. But I think the pronouncement of shifting back to a capital gains regime is going to be a positive one.
Right. Let me also welcome Sanjay, who's joining in. Sanjay Sena, founder of Citrus Advisors, on the program. Good afternoon to you. Help us understand, what would you make of the announcement that's come in? Are you disappointed with that STT hike for the F&O space? And, the markets that were already low before going into the budget, Nifty was down 4%. Today, another 2% hit there when we look at the, major indices. How are you looking at the announcements?
So if it is with specific context of the budget alone, I will say that, if you look at it from the market's perspective, definitely it's a disappointment that the market is facing right now with the STT hiked. But, traditionally, the budget is viewed in three parts. The first part is the reaction to the budget speech. The second part is the reaction to the finance bill. And the third part is the reaction to the actual outcome of the budget, which plays out over the next few months. So I think, today the knee-jerk reaction is not very surprising. But having said that, we also need to take a step back and see that, what was happening even before the budget speech started. We all are aware of the sheer crash in the commodity prices, and more particularly the precious metal prices. So that has had an overhang on the market anyway, and on that, if you have a sort of, a near-term impact of the STT, and STT hike, and not a modest hike, it's a very aggressive hike in the STT. So obviously the market is disappointed. But, if you look at some of the other announcement, and Mr. Reina mentioned that, I think the announcement on a tax holiday on data centers till 2047, nobody expected that. It's a bolt from the blue. And I think, it is going to bring a lot of attention to India from global investors, both on the capital market as well as on the foreign direct investment. So I think that's a very strong positive. Why did I mention that? Is because, one of the negatives playing on the market right now are the outflows from the foreign portfolio investors. If that stabilizes or reverses, I think that can also have a salutary effect on the market in the medium term.
So, Nischal, let me bring you in here as well, and let me get your reaction on the 3 points as we just heard as well, in terms of both the speech and the finance bill. What would you say were your key takeaways? We've just heard from some of our other guests as well, Sanjay also talking, in both Sanjay and Mr. Ranina as well as Gokul finding it very attractive, in terms of the global positioning. What would be your key takeaways?
So if I may say basically a few points, I think the usual things, basically it's a very, very strongly growth-oriented budget, basically with a clear focus on R&D and the skill development. If you really look at it in the initial announcements which the finance minister made, I think there were a lot of ideas basically which she has put out for skill development. So I think that is one important point, and government is focused on growth, and the second thing, they are focused on job creation. I think these are two things basically which we should look at it. From a stock market point of view, yes, the STT increase has got a implication basically, and that's why the market is reacting negatively, and all the market focused stocks are reacting negatively. But I think that was maybe it's a bit steeper than expected, but I think given that SEBI and government has been indicating that retail investors have been losing money on the F&O side, some sort of this thing was expected. So, but the increase is steeper, and that's why the market is reacting negatively. Otherwise, I don't see, I see a much positive things basically in the budget than just looking at one increase on the STT side. Possibly in the next 1 week, market will forget about it and move on.
Right, a massive dose of volatility coming into the market, 24,974, and Abha and Sakshi, the low was 24,571. So from 571, a bounce back to 957, That's an easy 250 points on the Nifty alone. This, ladies and gentlemen, is the intraday volatility that we are facing. Coming to Mr. Ranina, sir, would you want to comment on the fiscal glide path that the finance minister has unveiled? We've seen a lot of macro consolidation continuing despite global turmoil. Do you think the finance minister missed an opportunity to maybe open up the purse strings and feed the economy some good dose of populism?
Well, I think the global perception is that if you want to improve the credit rating of the country, you have to keep your debt in check. So the reduction in the debt GDP ratio is one good thing. Fiscal consolidation is one good thing. So this is something which will certainly give a boost to the Indian economy. Because if the credit rating agencies improve our rating, then cost of borrowings will go down and the investors will come in. Today, the main problem in India is fall in foreign direct investment. And I think one of the steps to encourage foreign direct investment to come to India is to improve the credit rating of the country. So these two aspects of keeping the debt GDP ratio lower, reducing the fiscal deficit, going on the flight path of consolidation, these are the two aspects which will put India in a very bright spot as far as the rest of the world is concerned, which is going through a great turmoil. And therefore, I think this will certainly help. So one has to look at the broader picture. Apart from that, the huge capital outlay of 12.2 lakh crores, that is 12.2 trillion rupees, is a huge amount which will be very positively looked at by foreigners and credit rating agencies. So I want the whole global scenario to change, the global perception of India to change, because one problem which we have been having is the fall in foreign direct investment.
Yes.
The outflows are more than the inflows, and that has to change. And this is what the finance minister has done in this year's budget, to create the perception where more capital flows into the country. Capital flow is one of the greatest issues which the country is facing today. And if more capital flows into the country, I think the entire economy will stand to gain.
Okay.
Secondly, she has done things on tourism. She has done things on improving the infrastructure. She has done things on improving women power by giving them a lot of incentives. So more tourists coming to India, all this is going to help in a substantial way.
Right. Sanjay, do you think this budget has done anything to bring back FII money sustainably, or will they still look for better opportunities outside?
So I think there are two things in the budget which will probably make a dent in terms of the FII flow trends. One of them is the one which I mentioned, the fact that we have given this aggressive tax holiday on data centers. Last year, if you recall, one of the criticism against India was that we didn't have anything to offer to a global investor for AI or in data center space. No, in one stroke, the finance minister has created a massive opportunity in that space. So I'm quite sure that will bring that sort of attention to India. So that is one. And the second thing is, I think last year our sovereign rating got upgraded. And despite all the good things that were happening to the country in terms of inflation coming down, the fiscal deficit being kept in check, our currency kept on depreciating. And today we are probably on the verge of finalizing this long-awaited deal with the USA. So I think once that happens, that will also send out a positive signal to the global investors. So I think a third thing, which I digress a little bit, coming back to the budget. In the budget, the sort of focus that has been given to manufacturing, I think that is a very strong statement which will go out to foreign institutional investors. So I feel that two things if they happen. One is that the foreign portfolio outflows, if they reduce, that itself is a positive signal for the market. And I think, with these signals, there is every possibility, the thrust on manufacturing and the focus on data centers should make the flows positive also.
Let's look at the positive parts, Abha. Let me point out 2 or 3 stocks.
I was going to ask Nishchal just that. I would say the whole market's red. There have been positive moves announced.
Yes.
But everything's just reacting to the STT news.
So the positives, ladies and gentlemen, on the data center side is visible on one particular stock, Anantaraj Industries, which is a real estate play, the top gainer in the NSE 500 at the moment, days high and 8% higher. The lots of pharma companies are doing very well, as also are some hospital stocks for two reasons. Pharma, right at the beginning during the manufacturing speech that the finance minister said was an move towards enhancing biopharma, as also making India the global hub for biopharma manufacturing, and something like 10,000 crore rupees to be put over 5 years as an outlay. So biosimilars, biologics are the spaces that are doing well. Look at Newland Labs. So that's a big winner. Medanta is doing very well from the hospital space as it opens up, as the government wants to send up 5 major hubs. Nishchal, with this speech in front of you, now that there are no other major events left except for Mr. Trump, what do you think are research analysts and equity strategists such as you looking at in terms of sectoral plays?
So I think at the very beginning, the finance minister has really set out those 6 spots basically, and I would just enumerate them. One, you have already said that the government is going to focus on the biosimilars, which is a very big space which is emerging across the world, and we have got a huge competition because China is very big on the biosimilar space. So that's what I think is one of the spaces. The second one is the semiconductor. There the allocation is again very big, and you have got this this tax break also come through. So that's the second space. The third one is the basically rare earth, where again they have identified 3 or 4 states where they are going to be focusing on the rare earth side. So this is the third one, and the fourth is chemical parks. And I think 1 or 2 of them basically, which have been talked about earlier, also electronics, and focus on textile, because you have some issues basically as far as US exports are concerned. So these are 4 or 5 sectors basically which the government has highlighted again. And I want to highlight again basically, this whole budget is about saying that we want to focus on emerging technologies, focus on R&D. These are the 2 things basically which I take away. And upskilling India. These are 2 or 3 things which I take away very clearly from this budget. So focus on technologies, newer technologies, upskilling India, because there has been so many instances where they have been saying we are going to set up this college, that college, healthy set up parks for education. I think this is 1 or 2 or 3 things basically which I take away from this budget. STT is, I'm saying this is more to do with the this thing. None of the FIs largely invest except for the HFTs. They will be impacted by the F&O. None of the FIs actually look at or do much on the F&O side. So this impact is largely on the local side, largely on the HFTs, which I think the government anyway wanted to, didn't want to promote. So that's the way I look at the market.
Okay. Gokul, let me come to you. How are you looking at the tax announcements? Do you think the foreign residents now getting an easier access to Indian markets will, prompt them more? Is that some good news that we can take away from?
Well, there are 3 good news that we can take away from this budget. One, of course, is that the government is put an emphasis on the cross-border services sector in a very significant way. So if you remember the economic survey that came in, it did have a recognition that nearly 80% of the FDI that's coming into India is in the services sector. And I think what the government wants to do is provide tax certainty to the services sector, and is doing so by making sure that the ITA sector, and they have given a larger definition of it, will be getting a safe harbor. I think that was the ask of this sector for a long time. And I think therefore we will see a greater confidence in the services sector as it's being established into India. And I think the path and the journey for India being the GIC capital of the world is going to continue. So I think that's the one big takeaway which is there. The second is the finance minister recognizes that on the 1st of April 2026, the new Income Tax Act comes into effect. And they want to make sure that they can reduce the amount of friction that takes place in the new act on account of penalties, prosecutions, TDS defaults, TCS issues, conflict between what. So I think they are trying to make sure that the new act becomes a far more citizen-friendly act. That's the second thing that they're doing. The third part which they're doing is they're addressing some of the issues that were still niggling in some of the tax provisions, such as on MAT or minimum alternate tax. So they're trying to address that big piece. I think it impacts a lot of the manufacturing sector and asset-heavy sectors. So I think they're trying to do these three things. I think in that respect, it's kudos. It's a good budget.
Right. Abha, to gladden your heart, from a low of 24,600, we are back all the way to 25,000.
Yeah.
So a 400-point recovery from an intraday low. As we've been pointing out, this is extreme volatility, which a lot of people who were angry with the fact that there were hopes for an STT cut, and here we have a raise. So that's a bit of a disappointment.
Absolutely.
But then,
I think they're recovering from the shock, the markets, and maybe realizing.
they're emotional people.
Yes. We definitely are, and I think the markets are hoping to see more. But and I put this to all of you. Let me start one by one. Maybe Sanjay, you can take it, because if you look at the budget kind of holistically, I think there's a lot. And I think, as Gokul was also just mentioning, you'll go through the fine print and they've addressed some very critical sectors. But for an individual who's possibly watching today, they're always, of course, looking for further tax stops or policy changes on that front. And for someone who's investing in the capital markets, like a retail investor, this was definitely, as Shayal said, an emotional shock for them in the last hour or so. So, if you take a look at it that way, I mean, how do you kind of explain to someone whether or not to get excited about this budget, or how some of this is going to play out in the near term?
So, the first leg reaction to the budget is on the speech. And Shailendra has very rightly said that, today what you are seeing playing out in the market is more frustration and anger at the STT hike. But, if you take a step back, look at as to what the budget has done on a holistic basis. And I think that is where much of the retail investor will benefit from. They may not benefit from this STT tinkling, because only those who participate in the futures and options get affected. And we all know that the larger majority of the Indian retail investor actually is long only equity and not necessarily on the derivative side. So for them, one thing which is remarkable about this budget is that, look at the qualitative shift in the capex spending now. The government is not talking about just the traditional areas of capacity expansion. They are focusing on rare earth and magnets. They are focusing on semiconductors and electronics. They are talking about data centers. They are talking about, setting up sophisticated tool rooms for the capital goods. So I think, the fact that, there is a qualitative shift in the focus of the government capex itself is sending out a very big statement to the Indian retail investor as well as to the global portfolio investor. I think that's one big thing which, in my opinion, even if it is a disappointment today, over the next couple of months, we will see that playing out. The second reality, which the government is recognizing and is trying to make the capex more productive. If you see, in number of times in her budget speech, the finance minister has used the word offering X project on a challenger basis. Now, in this one, the way I understand is that the central government sets out the criteria, and the state governments have to bid for the projects and then take them there. So in the earlier budgets, what used to be happening was that, a lot of good statements used to be made, but, the execution on the ground used to be a little lackluster. But in the challenger mode, since all the states are going to be competing to get those projects to their state, I expect that the execution will also be much better, which is one of the handicaps in the past, when we have heard good words in the budget, but the execution on the ground has not been very good. So that is the second thing that I see. And the third one is the focus on urbanization. This explicit statement that, city industrial parks would be set up, and, university conglomerates around these industrial parks and so on and so forth. So I think there is a lot of focus on moving to where the economic activity is now shifting. And the most of the economic activity today now is happening in and around urban centers, and there is a clear acknowledgement that that is where you need to bring the focus on. So these three, I think, will play out very positively.
All right, let me also go across to Karishma Sudhani. She's been tracking the budget live on ground. Karishma, take us through what's the mood on ground, what have been some of the key highlights. You're in touch, of course, with all the officials there at the Finance Ministry. Give us a sense, give us a mood check.
Well, I interacted with a couple of members from India Inc. and while the Josh is pretty high in terms of a higher capex announced, a stronger economic policy, all is not well with the way the market has reacted on the STT hike that Finance Minister Nirmala Sitharaman has announced both on F&O and options. That is not being taken in well by the market. In fact, a couple of analysts have been sharing that this could lead to a further downfall in the market with not a very happy market mood in comparison to what had happened last year, because government had given a clear income tax cut which did uplift the mood of a lot of people on ground in India. However, there is optimism seen in terms of the announcements that have come in for urban infrastructure, for youth. A lot has also been announced on participation of young entrepreneurs in different sectors, especially the champion sectors, and some kind of incentives that have come in on the export front, which even Business Today Television had reported a while ago. Let's talk about textiles, the 5 prolonged strategy that she's announced for textiles, the strategy that she's announced for sports industry. These are definitely going to go a long way. Also, what has come in from for MSMEs, the 10,000 lakh crore fund that she announced will also go a long way, because these were on ground challenges also with the US imposing a 50% tariff, where a lot of MSMEs had written to Finance Ministry, to also PMO. Exporters had directly reached out to PMO of the declining on ground situation. So on the macroeconomic front, Abha, things look great, things look fine, just the way they have been in the past few years, where government is confident that their road towards 2047 is shining bright, with a 4.3% fiscal deficit target for FY27, with a 55.6% debt to GDP ratio that she has predicted and estimated, and a 12.2 capex, which has been the highest ever for India, that government is banking big
Absolutely.
on. But on the market front, we may see a bit of a lull for some time.
Yeah.
Right, Karishma, we'll keep coming back to you for all those reactions from India Inc. at CII as well. But Nishal, coming to you, going into the budget, everybody was worried about these geopolitical tensions, the tariff shocks that continue to keep markets at the edge. Do you think any announcements on the export side, on the customs duty side, will be able to protect the Indian export-oriented sectors against all these tariff shocks?
So I think there have been very clearly two mentions about two industries which I could gather. One was about textiles, where I think there has been specific incentives which the government has set about man-made fibers and all. We need to go through the text, but definitely I think government is cognizant about that. Both textiles and leather. Yeah. These are the two large industries which got impacted. Because of this is also hugely labor intensive. So that's why I think government has come out with specific incentives for both these industries. So I think beyond that, I think what they have done is, which I was highlighting earlier also, is the skill development. That is, I think, a very major thing, because government recognizes that as we go ahead, the same labor is not going to be eligible for as AI gets in, and the same people will not be able to get the jobs done, and that's why they need to upskill India. So I think that's a very, very big initiative which I see specifically in the economic context.
Right. Let's look at two other stocks which are seeing a little bit of buoyancy, and I'd like to have a view both from Sanjay and Nishalji. Mr. Sinha, the talk of revamping the public sector NBFCs, in particular PFC and REC, is this an eventual path to a merger between the two? Sanjay ji, first you.
So I can only speculate that, whether the word restructuring is an euphemism for merger. But, we are all aware that, there were a lot of overlaps in the businesses of PFC and REC, and, maybe merging them into a single entity will create a much bigger and economical entity. By the way, in the same context, the government also on various platforms has been talking about consolidating public sector banks also into larger entities. And I think, there's a third related point, which is that given the thrust on the power sector, and our need for additional infrastructure, additional funding for the power sector is going to be massive. Maybe it makes logical sense to merge these two entities. But I can only speculate. We'll have to see what exactly does the finance minister have in mind and what is stated in the finance bill.
Right. Nishalji, your view on this potential merger ahead? Both PFC and REC have been very long-term wealth creators.
Also, I'm just going to let Sanjay go. Sanjay, thanks so much for joining us. I know you have to head off.
Thank you.
And yes, Nishal, please take that away.
So my view has been basically that why the need for a specific NBFC focused on the power sector. It is not that the banks are not financing. So the need for them, I think these are all institutions which had been set up 20-25 years back when banks didn't have the same kind of capacity on the balance sheet side, and the PFC REC used to fund for 20-25 year loans. So I'm saying today banks are equally capable of doing that. So why this? Basically, I think both of them should be merged together and maybe put it into a bank. That is a much better way to basically operate in this kind of scenario. I think it's a very right and pragmatic step.
Just curious about pharma. Just pulling it up just to see if there's any reaction, because there's a proper capex outlay for pharma. It's marginal, just under 1% on most of those pharma names. Even IT is it's pretty much marginal. I think the data center impact was more on like an Anantraj that you were saying, Shell.
Actually, Anantraj has actually gone up further from the point we had mentioned, so about 10.5% higher. But Abha, I think pharma was really beaten down, and it's a relief rally that's coming in. Mostly you see Sun Pharma 1.7% higher. Biocon, the finance minister utters biologics and biopharma, and it being the global hub, therefore you see 1.3% higher. I was seeing a nice uptick on Newland Labs as well, but Mankind Pharma, Ajanta Pharma, Akam's also doing pretty well. So these are sparks that you see in the market, desperate to sort of look at some breathing ground.
Absolutely, and I want to go back across to. Let me actually go back across to Mr. Ranina, because Mr. Ranina, you've said that this is a good budget, and I hear you, but given also a lot of the other elements that some of our guests have referred to, what would you say from the slew of reforms that she's announced outside of taxation that you have found to be on the right track, or that would be that would be something that will be appreciated with the larger ecosystem? Okay, Mr. Reena, I think we just need to unmute your audio. I think your Zoom is on mute.
I'm
Yes.
sorry. The reform process has now been accelerated because we have always had this reform for the last 12 years, starting from 2014. So a lot of the final journey towards reforms is now being completed. And the main issue is decriminalization of laws, making laws simpler, removing penalties, prosecution. All this will help in the reform process, making the law simple and making people, the foreigners, come and invest in India. As I explained earlier, the rationalization of the transfer pricing regime, advance agreement regime, making presumptive taxation mandatory, which will be something which all foreigners want to look at. We have been having this presumptive tax regime for foreigners right from 1976, for airlines, for shipping companies, for power plants, for those who are in the exploration business, and this has worked very well. So foreigners now want to have a decisive amount where they would have to realize how much they will have to pay by way of tax. Certainty is now being brought in, tax certainty, less litigation. This is the real reform which we need. And because India was always perceived as a country where there was a lot of litigation which went on for 20 years, 25 years, nobody wanted to invest in a country where we had litigation for 25 years. Now all this is gone. This is the real reform, making life simpler, making people easy for them to invest. They know exactly what their tax liability is now going to be, and therefore they will factor that in when they set up a project.
Yeah.
This is where foreign investment will come in. I think the real reform is when foreign investment comes into India. Foreign institutional investors are fair weather friends. The market will keep on dancing to their tune. But what India needs is foreign direct investment in industry, in manufacturing, in data centers. This is where the whole budget is about. Bring in money which is permanent so that the rupee stabilizes, the fluctuations in exchange do not take place, exporters tend to gain, making India export-oriented country, like for example sandalwood industry, just to give you one illustration. Now sandalwood is a great export potential. If we can increase the production of sandalwood in India, the export market will boom. So we have to now take advantage of that, especially with all the FTAs with the European Union, where there's zero excise duty, zero customs duty, zero tariffs. All this will make India a great destination, both for investment and for business. And this is where the reform process is now at this stage. The final leg of the reform process has been initiated in this year's budget.
Okay, thank you so much, Mr. Ranina, and thank you so much, Gokul. We'll thank you at that point. You have to be going elsewhere. Thank you so much for being with us and sharing all your insights, decoding for us the fine print of the budget. But Nishchal, let me come to you again. And I wanted to ask you specifically, when it comes to sectoral bets, what should those be for investors after the budget? We have seen some outlay increase in defense to 5.94 lakh crores from 5.68 lakh crores earlier. Do you think the railway corridors that have been announced, we've been discussing about announcements on semiconductors, rare earth, how are you really going to be maneuvering these announcements and selecting the key winning pockets for investors?
So I think two or three things basically which I would clearly want to highlight. One is the government focus on manufacturing. That has been very clearly, whether it was setting up those 5 fast-track railway corridors, that's going to be a big flip to the whole construction industry as well as the railway gear manufacturers. The second one is the semiconductor side of the business, basically where government has given this huge tax incentive for foreigners to come and set up the data centers in India. And the third one is defense, where the outlay is once again been increased by around almost 20-21%. And the fourth one I would say basically is pharma. These are the 3-4 sectors basically which I would focus on. And most of the others are basically like rare earths, they are focusing on. I think there are 4 or 5 sectors very clearly, but rare earth I would put into largely into manufacturing. So these are 3 or 4 sectors basically which I would focus on from the budget takeaway.
Right, Nishchalji, thank you so much for sparing your time, especially on a Sunday. And I'm sure that your Excel sheet, which details all earnings and all projections, will be working overtime tonight to find out winners and bigger guests bigger market movements that might come in over the next 12 months or so. Now for basic clarity on research post the budget. What should investors be doing? We are now joined by Mr. Nitin Raheja, Executive Director at Julius Baer Wealth Advisors. So Mr. Ashish Somaya joins us from CEO at White Oak Capital AMC, and of course Mr. Harendra Kumar, MD at Institutional Equities for Elara Capital. Coming to you first, Harendra, your thoughts on balance. How does the budget look after 1 hour of speech? What is your research team focusing on?
Good afternoon, Shell, and to everybody on the show. I think this is one of the very big pivots that the government has done with this budget. I would like to take a few minutes to explain. This follows the slew of FTAs that the government has signed, and this budget focuses on creating an ecosystem that will drive productivity, production, and the entire value chain to make us an export champion. So that's the underlying message of this budget. If you would have read the economic survey, our potential growth rate has gone to 7.5%. that we would have sustained if, on the long term, if we would not have taken such reform measures. But now with FTAs in the play, we needed to create a manufacturing ecosystem. The budget has catalyzed that. I think 27-28 onwards, we should see an incremental bump up in our annual GDP. If all the announcement that's been put out in the budget today actually get executed. So all in all, it shifts the budget towards a more manufacturing export oriented. The key emphasis, of course, is medical tourism, also export of individuals to UK, EU, etc. Then you have textile parks, then you have semiconductors, and then you have data center and nuclear energy. So a lot to digest for the market with respect to future opportunities. I think the devil will be in the details, but I think it's worthwhile to go in and find opportunities there.
We can go across to Ashish. Good afternoon to you, Ashish. We are seeing a bounce back into the markets. From the lows, we are back up 1,000 points as far as the Sensex is concerned from the intraday lows that we've seen. We're also looking at the IT sector now up into the green as well. The safe harbor announcements that have come in and probably some others that have really led to some sentiment revival on the D Street after they have initially, we've seen the knee-jerk reaction on STT. How would you look at the announcements there? What would your approach be specifically on IT space?
So I think, if you really ask me, the budget has done a lot in terms of, like when you mentioned IT space, the safe harbor announcements and, a lot of the clarifications or, minor changes which actually, result in ease of doing business as well as, simplify interpretations. I think all of those are welcome. In fact, overall, if you see the budget itself, my first impression was that market would react negatively because STT was increased on FNO, and on the other hand, for some reason, everybody wanted to hear something about making capital markets more attractive, through some capital gains related or dividends related, some announcement. So obviously none of that has happened, and on the other hand, FNO, STT has gone up. So I think there was this initial knee-jerk reaction, but if you leave that aside and then you focus on the other areas, right, which is, say, for example, data center related investments having a tax holiday, or for example, all the announcements about making manufacturing more attractive, so all of those things are actually positive. I think the market would obviously get preoccupied or overwhelmed with the unexpected further increase. And I think FNO, we're probably coming in from this sin tax kind of perspective, almost it looks like, right? Maybe that was unexpected and probably not even required when, market is anyway struggling. But if you leave that aside, overall, my sense was always that, market would move ahead of that and look at the other aspects of the budget.
Let me just take this opportunity, Mark, the IT sector, as Sakshi pointed out, 1,000-point uptick on the Nifty IT index from a low of 37,300, now at 38,670. So that's more than 1,000 point. And look at how TCS, Infosys and Wipro are moving. TCS is up 2.7%. It's the top contributor on the Nifty. Infosys has surged 1.4%, and Wipro and L&T, Mindtree, are also gaining strength as we speak. Let's get Mr. Raheja into the conversation. Good afternoon to you, Nitin. Your first thoughts on how the budget shaped up?
No, I think the most important facet was how do you sustain economic growth and improve economic growth. I think that is the key element. Let's not forget markets are very often derivatives of that, and markets attract flow based on economic growth. So I think from that perspective, if you look at it, what is very different is if you look at budgets traditionally, the first half of the budget always talks with a long monologue on rural agriculture. This time around it was different. It clearly showed where the government was going. It talked about manufacturing, manufacturing and manufacturing. So I think the fact that we have these FTAs in place, the fact that improving the share of global trade in our GDP has become important. The fact that new age areas as semiconductors, electronic manufacturing systems have become important. And that's sort of manifest in the kind of announcements that were made, for ECMS from 22,000 to 40,000 crores, the tax holiday for data centers. I think the budget seemed to have, identified clearly where the problem sort of rests and lies, and how do you sort of improve that growth. So whether even it was talking in services, whether it was tourism, and a lot of MSME and SME related areas, I think that's more important. The issue from a market perspective and a disappointment, I think it's pretty unfair considering that you've just had these tax tweaks to capital gains a couple of years ago. You had GST just about 3-4 months ago, and suddenly to have more tax changes. I don't think that was being rationally expecting this. Let's understand where we stand today. We were growing at rates of 15-16% our earnings, saw a slowdown in rates. We didn't have a big AI story. If you look at it from a global investor perspective, the key reason why we've been sealing this around is because India is perceived as an anti-AI trade, where we didn't have any clear story there. Today, you have put in a framework for the data center and given tax holidays till 2047. You've talked about investing in the semiconductor area, right? So you're trying to address one of those narratives. The flip side of that is some of the emerging markets, such as Korea, Taiwan, on a relative price to growth basis, PE to growth basis, look far more attractive, and hence money is going there. So you need to up your growth rates to get that money back. So I don't think that it's been particularly unfair from a capital market perspective. Yes, you could have probably, we've had a lot of tweaking with the STT in the past, and we could have sort of put, it to rest there. So I think that's the only, if you were to call it an irritant, but I think by and large, I think the government seems to have identified the key areas where it wants to grow, and they seem to be, indicating that's the right direction. So I'm not really disappointed. I think, this is more knee-jerk. I think markets ultimately will be driven by company growth and results.
Absolutely. So Harendra, let me bring you in as well. Given, just taking off from where Nitin left off, in terms of once we see the market sort of stabilize post a shock, and they've already recovered over 1,000 points, they're looking a lot better at this point of time. Do you feel there are certain sectors that we're going to start to see amplified interest in going forward as the markets have a little bit of time to digest some of this news?
Absolutely. Before we go to your question, let me also clarify on the STT. While this specific, tax will be negative some stocks, but it is a multi-dimensional positive for the economy.
Okay.
Number one, it's a very large tax collection source in the budget. Number two, a lot of the Indian youth was only playing F&O trades, and it was also guzzling up the savings. So with this money pool back into the savings system, it will be deployed productively. And number three, so it's positive on banks and it's positive consumption. So a cross section of players will be, the ripple effect of this tax will be positive on cross section of the economy, but negative on a few stocks. So it should be seen from that context, and there is merit for the government to go out and put such a tax. So now coming to the other sectoral benefits, I think the clear winner out here, of course, is textiles, number one. Number two is the fishery and agri piece. Again, if you will look at the subtext of the FTA's fisheries, aqua exports are a large factor. Third is leather and shoes. The government spoke about sports and others. So this is catalyzing a lot of sectors which are not traditionally a basket where fund managers have been investing. And third, of course, is nuclear energy, which is power, and of course the IT sector. So because we're going to be dominant exporters of engineers or skill set. So they've catalyzed a lot of sectors. These were not part of the playbook for investors till December. I think they will start evaluating them post this budget.
Right. Let's welcome in Mr. Pankaj Tibriwal, Founder and Chief Investment Officer at Ikigai Asset Management. Good afternoon to you, Pankaj. Where does work begin at this point of time? Are you happy with the fiscal glide path? What attracts you towards sectors? And broadly, how do you see this budget?
So I think budget is quite pragmatic, contrary to what the market is showing on the screen. And I think markets slightly bit is disappointed on the STT hike. But as equity investors, I don't think it should be a big botheration. And also when we look in the past, in the initial short term, there are some impact on volumes. But over a 3 months period, I think that gets adjusted. So yes, in the environment we are in today, market has taken it a bit negative. And over the last couple of years, we have seen enough documentation that finally retail investors losing money. And this is a step to discourage that kind of a investment in futures and options. But the main positive, which I think budget is missing out and people are not talking, is the buyback tax, which has been rationalized to capital gains. A large part of corporate money was not going either in capex or not getting distributed back to the investors. I think with the adjustment done back to capital gains and corporate promoters at 22 and individual at 30% is a very, very welcome move. And from an overall, quality of the budget, I would say it's pragmatic. You have laid a lot of things on futures like data centers, AI. You have doubled your outlay on electronic manufacturing, and India has shown the way to the world, and a lot of manufacturing push. So I would say that market is currently overreacting to it. It will digest it slowly. From the day's lows, we have seen some recovery. I think over the next couple of days, market will digest that it's a very balanced one, not a very, negative one. And I always say that no negative is a big positive. So yes, except the STT part, there is, which market has been worried about. And there are, some kind of expectation at the margins that you will tweak with the long-term capital gains or short-term capital gains on the lower side, which has not happened. But otherwise, I would say that it's a pragmatic budget. It's a balanced budget. I don't see much negatives out there. In fact, there are a couple of positives.
Okay, pragmatic and balanced budget. Ashish, coming to you. Give me 3 top hits, that you found out from the budget, and 3 big misses that you think it's an opportunity gone, for the finance minister this time.
You see, I think, the top hits clearly, if you ask me, is, like, say, for example, what was announced on the myriad set of simplifications and rationalizations related to all safe harbor related stuff. I think those kind of clarifications, they always help. Second thing is, if you ask me, it is related to the whole manufacturing, like Nitin also mentioned. He is absolutely, he said something very, very insightful, and I must appreciate that. Usually you see like a long description about rural economy and those kinds of things. I know those are important and the government invests there, but this was all about manufacturing and manufacturing. And the third was obviously that, 2047 is obviously like nearly 21 years away. So taking such a long call and engendering a scenario where people can invest in India, and run cloud services and data centers from India for serving the whole world. We have a good amount of we have land, we have the necessary infrastructure we are putting in place. It will be a fillip for energy and power sectors. It will put us on the map when it comes to data centers. So I think those are the important ones that one can really focus on.
Right. There are clear emerging winners at this point of time, Abha, once the fine print is digested. One is the IT sector. You've talked about safe harbor. Sakshi's mentioned that. All our guests are also pointing about the fact that IT seems to be looking good. Also taking it away is to some extent the pharma space, both in terms of manufacturers and of course the hospital chains. Remember, with this problem in Bangladesh, which both countries are having, India and Bangladesh, a lot of medical tourism came to a bit of a pause. We get a lot of medical patients from Bangladesh, and that was an issue that both countries were trying to sort out. So these are 2 clear winners, and the fact that the Nifty is now well above 25,142. So it's both a shakeout as well as short covering. From a low of 24,577, we are now at 25,147. It's a clear 400-point uptick.
It's a steady budget. It's one where she's managed to holistically really look at all different parts of the industry. It's a progressive budget with clear moves on new age technology, on upskilling, so on and so forth. And it's also an inclusive budget with things like reducing tax on medicines that you may need, on key illnesses, whether it's reducing tax on items for personal use. I keep on mentioning that because these will be big fillip, and very soon after we've also seen that import tax cut on luxury automakers. There's clearly a trend that's sort of emerging there as well. So she's also had sort of more inclusive measures for those with disabilities, for women entrepreneurs, for MSMEs. I mean, she's covered an entire spectrum, an entire gamut, and I think we will start to see that reflect in some of the pockets as we move along, from renewables and energy as was expected, pharma, AI and data centers, hospitality and tourism, and we're already seeing a little bit of move when it comes to that segment as well in the market today.
Yeah. Harindra, coming to you, this question of restructuring the public sector NBFCs, in particular PFC and REC, how do you see that panning out over the next 18 months or so? Is there a merger on the cards?
Technically one is a holdco and one is a sub.
Yes.
Right. And the point here is that India is looking at a huge expansion in the nuclear capacity. A new Electricity Bill Act is also on the anvil, which is looking at restructuring the state electricity boards with respect to what they have to do. And the data centers need to be funded. So you can only speculate with these aspects, and clearly you require huge funders for this credit guzzling programs that is on the anvil. So if you ask me, the major worry for PFC REC was the dwindling opportunity with respect to the SEBs. Now with nuclear and data centers availability and some tweaks in their MOAs and articles of association, a new opportunity might come up. They're great businesses, great companies. Maybe realigning to a new opportunity is what my reading is.
All right, let me also thank Ashish Somaya for joining us on the show today. Ashish, thanks so much for joining us. Okay, let's take a look at the markets as well. At 1:30, so we're looking at about an hour post the budget speech. Clear recovery coming in. The Nifty is at 25,130, down about 200 points now, and steady at this point. Remember, first budget on a Sunday, we'll see that rollover action. Tomorrow we'll sort of see some key commentary also, of course, in the second half of the day on the budget as well, and the fine print. The Nifty IT index is now up 1.5%. It's looking really good. I've been waiting for that reaction, and it's finally coming just in the last couple of hours of trade, Shell, but IT is looking good for sure.
Yes, that's true. Let's take this conversation forward with our phenomenal research panel. A view coming in from Julius Baer. Nitinji, when you look at the global picture and the absence of a clear AI trade at this point of time, what the government has done is tweak the data center setup and given a very, very long tax break. Given that background, what are the 2 or 3 stocks or 2 or 3 subsectors you think will do well? We clearly do not have an AI trade in India as of now.
Well, what could happen because of this is, if you really look at it from an AI perspective, some of the and data centers, right? So one is you would see a lot of sort of T&D engineering companies who actually supply transformers and other electrical equipment which go into data centers. You could see the emergence of some of these data centers evolving into REIT sort of structures and providing an opportunity for investors as they go ahead. And of course, you could see real estate sort of benefit because of that. So I think these are some of the clear beneficiaries that are there immediately from a data center perspective.
Okay. We have Gaurav Dua also joining us. Gaurav, good to have you with us. We've just been dissecting and processing the budget speech, and markets are looking a little better right now. Let me get your first initial take on the finance minister's speech this time around.
So I think it was largely in line with expectation, apart from 1 or 2 announcements, which I think have taken the market with little bit of a negative surprise. So it was more to do with the hike in STT. And secondly, the gross borrowing number has been higher than expectation. I think these are the two announcements which have basically hurt the street sentiments. Apart from this, there are like two announcements which were expected and have not come, which was to do with the rationalization of the LTCG, STCG, or to provide some kind of an incentive framework to attract FIIs. So I think barring these four, a budget is largely in line with the policy statement. It is in line with what was expected. The fiscal math also, I think, is very, very realistic. Nominal growth of around this 10%. Tax receipt growth of around 10.4%. The capex allocation as compared to the revised number is pretty high. The effective allocation stands at around 17.1 lakh crore, which is around 22% hike. So I think overall, after this initial knee-jerk, what you see the selling in the market, I think the markets will come back to, fundamentals will come back to fore, and this and things will stabilize.
Gaurav, how are you looking at stocks like Anantraj? It's now up by 11.5%. The first 10% circuit has also opened. Remember that tax holiday announcement for making India a data center hub is really doing, its wonders at this point in time. How would you look at this announcement by way of any opportunity in the data center space? Anantraj, do you think is the best placed stock there? Are there other opportunities too?
So I don't track that stock, so I will not be able to comment. But yes, there are a lot of stocks in that space, which I think will do well. Apart from this, there are a lot of power transmission and transformer companies, generator companies, which I think will do well because of the expansion in the space.
Okay. Well, that's the story so far, ladies and gentlemen. After a very, very strong knee jerk, the market seems to be finding sanity. And of course, this was a very light market before we began. Remember Sakshi's opening comments, 4.5% down in January alone. The Nifty was the world's worst performing global index. Well, to say that there were not many negatives is itself such a big positive, and perhaps that's the reason why you see this knee jerk. As good a time as any to invite Mr. Sudeep Bandyopadhyay, Group Chairman at IndiTrade Capital. Sudeep is smiling, so he's digested the budget and read the fine print and will now offer his critical remarks.
I want to ask Sudeep some specific questions. Sudeep, of course, on the fiscal glide path and also the dilution in terms of the move towards 4.3 versus 4.4. So the states are actually going to get less, and that's probably going to play out politically. And thirdly, she's even addressed bond markets. So fairly significant measures across some of these key paradigms.
You're absolutely right. I think the government has very clearly stuck to the path of fiscal consolidation. And that's quite commendable. And they have been doing it year on year. So I think it's a very good thing. They have maintained 4.4% target, and they're going to remain on target. Next year's target, they're put at 4.3. So the roadmap continues to remain as mentioned many years back. The other thing I would like to point out is that the capital expenditure, I think there were a lot of talk that whether they will be able to maintain or not, whether they will reduce. But they have not only maintained, they have taken it up to 12.2 lakh crore, which is roughly about 9% more than last year's. So I think, again, that's a very, very commendable thing because, private capital expenditure hasn't picked up and government continues to do the heavy lifting. So these two, I would say, are very good steps which the government has taken. Apart from the, sector-specific measures and other things, the net borrowing figure looks absolutely fine. The gross borrowing, there's a little bit of confusion still, because the gross borrowing figure which has been given out by the finance minister looks little on the higher side, but one needs to study the detail to understand the nitty-gritties there. But on the face of it, it looks a bit higher. But what the market is reacting to is, of course, the STT. The futures STT has gone up by 150%. The options, it has gone up by 50%, and definitely the market is upset. There was some expectation of some long-term capital gains tax exemption or relief or things like that. While that hasn't come, the STT has been hiked significantly, and that is creating a lot of nervousness, a lot of selling, and a lot of panic in the market. I expect this to continue today and probably tomorrow also, because today FIIs and foreign investors are not present in the market, being a Sunday, and tomorrow they will come. So you can expect weakness tomorrow as well as pressure on the currency tomorrow.
Right. Abha, the bond markets are shut. The rupee is not trading.
Yeah.
Call money market is shut too. The only people who are working are the equity guys, and they are getting dodged.
Yes. That's true.
But welcoming, how should I describe Trideep? Well, he runs a wonderful mid-cap fund called Edelweiss Mid-Cap Fund, which has done phenomenally well over the last 3-4 years or so. A warm welcome to you, Trideep.
Good afternoon.
What are you thinking at this point of time in terms of a stock picker? What does this budget open for your research team in terms of new picks, and how do you navigate the pain points?
See, markets occasionally, once in a while, finds an excuse to wave off the extreme momentum in certain trades which have been prevalent over the last month or two. Whether it is in commodities, whether it is in some of the capital market stocks, or otherwise, basically it's been going in one direction for a good few months. Some of the measures that have come through in the budget, like STT, the previous gentleman was talking about, breaks a bit of a momentum in that we see as a bit of a pause rather than kind of changing the major direction. It's probably not yet reached the levels where one could start bottom hunting, but I would keep an eye on two sectors particularly who are also taking a knock. One is defense, where stocks have corrected despite allocations being up. Secondly, after a strong run, if the capital market stocks do come at a reasonable levels, would be happy to take a look at them. At the moment, I think we are just watching rather than trying to take action immediately.
Well, that's a very interesting point you mentioned, Trideep, the fact that you might take a look at capital market stocks. Abha, this cut in STT also has an this jump in STT also has an implication on the valuation of the NSE IPO, because a large chunk of volume comes from options trading. Look at how BSC has moved down 9% last time I checked. So that's a very sensible thing to look at. You look at beaten down valuations and then maybe re-enter the same sector. Gaurav with us. Gauravji, a thought on how you see this 7 sectors that the government has highlighted. What will the research team at Stanchart Securities be looking at? Rare earth metals, the semiconductor space, you have biologics and biopharma, you have a choice from the railway space as well. What attracts your attention the most?
So I think these spaces were already in focus. If you see, a lot of being done in terms of basically trying to incentivize the growth there. So biologics is something which has been there in our listing radar. Semiconductors, electronics manufacturing is again spaces which have been doing well and is just a part of our focus. But overall, what we believe is that macro environment has clearly changed. The government over the last year or so has done a lot to stimulate the demand, and that is why we feel that that this in consumption and the banking space, financials, could be the leaders of the next leg of the rally in the market.
All right. I love that. Let's talk about that a little bit more when it comes to banking and financials. And Sudeep, we were really talking about how the focus has shifted now that the banking sector has become so robust in terms of really how we can increase deposit growth. We're looking at further consolidation. We've looked at capitalization of the banks, and equally some of the measures announced today are all pretty much in line with ensuring that things move along in this direction and continue to contribute to the growth economy. What's your take when it comes to the banking and financial space?
I think definitely the announcement of a standing committee on this on this area, I think is a welcome development. They will try to further facilitate the streamlining of this sector. There are small issues here and there which can be ironed out by a standing committee, which continues. It's not a one-time committee; it's a standing committee. The other announcement, which I think is not directly linked but related, is the divestment target, disinvestment target has been raised from 33,000 crore to 80,000 crore. Of course, this is still a very conservative target, but I'm assuming that IDBI transaction will get completed, and I'm sure that is included in this 80,000 crore target which has been given out by the government. Probably this will also include further divestment of stake in LIC. So I think these two financial services related activity is also planned by the government, and I think in the long term these are very, very positive development for the sector as a whole.
Okay, one standout winner for the budget, Abha, is Anantaraj Industries, now up 13%. I think each passing 15-minute window, it's adding a percentage points to its tally, and 5.7 times the 5-day average has been traded, which is 1 crore 35 lakh shares as we speak at about 1340. Sudeep, at this point of time, your entire mid-cap and small-cap space is undergoing a massive churn, as also, a rethink, if I may say so. What are you trying to communicate to your investors in the small-cap and the mid-cap fund in terms of when the tide will turn? Do you think the budget has it?
I think budget in that context in the historical years have gradually kind of started being lower in importance in the context of investing, particularly medium-term investing from whether it's large caps, mid caps, or small caps. I think we have been saying for a year or a year and a half that there's been a strong 3 or 4 years of small cap performance. We might see a bit of consolidation. What we are saying in small caps particularly is that we are in the final stages of that consolidation in the next 3 to 6 months, and after which they start getting kind of attractive as well. In the context of mid caps and budget, since some of the sectors where mid and small caps are heavy, which include capital markets, some of the defense names, the announcements have not particularly been pleasing to these segments. They are obviously taking higher knock than otherwise. But it doesn't sort of change. There are other sectors, like, for example, hospitals, which have done reasonably well. Likewise, some of the EMS areas are kind of, gradually coming back. So I think mid and small cap is a segment is all about stock picking and how do we pick those areas where the valuation growth equilibrium is still in favor of investing. And we continue to do the same on a day in, day out basis. That's worked well for us in the past and will continue to do that going forward as well.
Okay, fair enough. Let's just take a look at the markets for a moment. Just mark the action there right now. Nifty 50 still down about 1%, about 200 points as we speak right now. Share any bright sparks that you're spotting?
Yeah, Abha, I was just thinking of marking the entire internet space, something that you are very well connected to. Yes. So deliveries up.
I did see that, but I wasn't being able to connect the dots.
Exactly.
Yeah.
But the fact is that,
is it TCS? Is something to do with...
No, I think all those safe harbor statements and plus the fact that they were really beaten down. So look at Paytm, top gainer in NSE 500, 5.5% higher. You have delivery buzzing. You have a lot of strength coming into Honasa, and there was one more stock that I saw from the internet space that was doing well. Let me just find that out. But I was just trying to somehow fix 1 plus 1, but well, it's sort of not getting into me at this point of time, but mid-cap IT, look at Emphasis. That's doing pretty well, 1.3% higher, 1840 for you. My apologies, 2805 for you. And a bit of the insurance space also coming up. But then winners are few and far between. And at this point of time, the Nifty, ladies and gentlemen, is still down, but not down that badly. 1% lower, 25,056. And just let me tell you, the low today was 24,571. So a bit relief.
Okay, so I think to some extent they're tracking, of course, I guess further boost to consumer spending, more digital transactions, so on and so forth. But Sudeep, anything that you're spotting as to why we're seeing some of these e-commerce or internet stocks higher post the budgets? It's particularly, all of them.
Well, I think very clearly there are two things which are positive. One is this buyback-related announcement. That is significantly positive for most of these IT companies. Remember, Indian IT companies have been doing regularly buybacks, and this buyback taxation has changing the buyback taxation the way they have now done brings back a lot of relief to the non-promoter shareholder category. Instead of being taxed as a business income or a normal income, now onwards, buyback will be treated as capital gains in the hands of non-promoter shareholders. This is a big relief, and I think this will encourage further buybacks by IT companies, and I think that's the reason why some of these stocks are getting excited. Also, the data center related announcement and the kind of relief tax holiday being sought to be provided to this sector for this entire space, I think is encouraging the sector. Not sure at this stage, other than Anant Raj and few other companies who are into data center building, who will benefit and how far they will benefit. But I think this is a good development, and some of the IT companies may look forward to taking benefit of these.
Right. I'd like to also mark 4 stocks. They may be in the red, but Abha, before markets began, they had hit record highs. In order of seniority, State Bank of India.
Yes.
At the moment, 1,034. It's down 4%, but early morning it hit a fresh peak. BEL down 3.5%, but fresh high. Oil India, and of course, Axis Bank. Sudeepji, this comes to you. We haven't discussed Axis Bank ever. This is not a stock that comes on any radar or any show, but yet we see a nice record high on this one. How are you looking at the private banking space? More importantly, the increasing importance of State Bank of India post the Nifty and the Bank Nifty weightage rejig.
Well, I think, Shailji, I have been positive on the PSU banking space for some time, and I maintain my view. As far as Axis Bank is concerned, of course, amongst the larger private sector banks, Axis Bank valuation-wise looks attractive and definitely worth picking up from a medium-term perspective. But if I have to pick up, 1 or 2 banking stocks, I will still go to the PSU pack. SBI has been my favorite for last 1 year plus, and I continue to maintain my positive view there. If you look at the valuation, it explains itself. Some of the large NBFCs quotes at 5 to 7 times book, whereas SBI still quotes at 1.1 time book. If you look at the smaller PSU banks, and some of them I like very much, mid-tier and smaller PSU banks, they are really quoting still at a significantly discounted valuation compared to their private sector and even NBFCs, and they definitely deserve a better valuation. So those can be picked up. And this has nothing to do with consolidation, which the government is talking about. Whether consolidation happens or not, these stocks are definitely worth picking up.
Abha, one real big corporate battle which is not getting reported but is happening is between the market capitalizations of State Bank of India and ICICI Bank. Every day they fight, 2,000 crore idhar udhar, it's like a tug of war. So the moment the rejig of the Nifty and the Bank Nifty was put into place, SBI's weightage increased and therefore funds started buying. Once funds started buying, the market capitalization came up, and now it's a battle of wits, so to say. Aaj kaun aage aur kaun piche. So keep an eye out, ladies and gentlemen, on ICICI Bank's market capitalization and that of SBI. Remember, SBI controls 26% of Indian banking, yet is not the top bank in terms of market capitalization. That crown is with HDFC Bank, and it is far ahead of the pack.
Okay. Let me thank Trideep. Trideep, thanks so much for joining us. Good to get your perspective on the budget. And let me go across to Pankaj as well. Pankaj, in terms of what to watch out for. I mean, we're still heading towards closing, so let's not completely sit back yet. But once the market has a complete chance to process the budget, what are you anticipating in terms of sectoral implications going forward? Okay, I'm not sure. Okay, let me also check with Gaurav as well. Gaurav, both the money markets as well as, of course, FIIs are all going to really be addressing some of these budget implications coming Monday. So as we head into trade tomorrow, what do you think will be the likely things to watch out for?
So yes, I think given the high gross borrowing number which has come out, bond yields are not going to react in a favorable manner, and that again could have some impact on the banking stocks. But overall, what we see this is that the core advances are growing. They have started growing at a healthy rate. The consumer demand push, which has been this thing given, will also help the space grow, especially NBFCs. So we think this weakness will be an opportunity in that space. Secondly, of course, some of these spaces like chemicals, defense, data center, and all these kind of stocks will be again in focus because a lot of that small print will be worked out. How much of the allocation has actually increased for what space? And I think this is the spaces where what I see as of now has seen a significant amount of increase in allocation.
Okay. I'll also pull out a neat trick, Abha. This time what we'll do is, since the week is ending and we also have the beginning of February, we'll pull out weekly gainers. It gives you an idea how right or wrong the analyst was while tracking a particular sector, and you'll see a very distinct, how should I say, underlying tone. I'll request the PCR to kindly fire the weekly chart of GE Vernova TND. It's up 23%. Look at Schneider Electric. It's gained 14%. Power India is up 14%. ABB has gained 11% in the past 5 trading sessions. All of them, Abha, are underlying thoughts for the data center space.
I just love that, Shell's mood has drastically improved.
I'm having good coffee.
After the initial first hour post the budget. And yes, data centers clearly seem to be the big thing. And I know that Siddharth's been talking about this for a while and how this is going to be a big sort of pocket and driver of growth going forward as well. I'm just trying to look at, what else is moving as we sort of head into the last leg of trade, and also keep an eye out on other commentary coming in. But, we were talking about, for instance, let's look at the kind of NRI investment that they've started to kind of, they've eased, drastically cut actually, the implications there so that more NRIs can come in and invest in the markets. That's actually a pretty solid step, isn't it, Trideep?
That's definitely a welcome development, and I think this is one step which the government has taken, which definitely will have a good impact in the medium to long term. I'm not sure whether immediately there will be impact, but medium to long term, this is definitely positive, and this is par for the course. This should have been done, and this has been done. But I will also say that at some level, the steps taken on fiscal consolidation, the step taken on ensuring that capital expenditure remains buoyant from a public perspective, definitely will encourage the foreign investors, considering the macro stability which the government is focusing on, to definitely come to India at some stage or the other. Of course, corporate earnings needs to improve, and multiples needs to become a little more reasonable for things to stabilize and they to start coming. There is an issue as far as currency depreciation is concerned, and we need to ensure that currency movement is not very sharp. Let's hope and pray that these things do get achieved in the medium term.
Okay. One sector, Abha, I'd like to highlight again. I'll request the PCI to kindly show the chart of Vardhman Textiles. Now up about 4.5% at 451. Amongst the 7 manufacturing sectors that the finance minister began her speech, she focused also on textiles, on the integrating of many, myriad schemes that they have, the National Fiber Scheme, providing capital support, providing technical upgrade and technological upgrade as well. On the khadi side, on the handloom side, as also setting up mega textile parks, including adding value-added technical expertise to the textile sector. So apart from Vardhman Textiles, there are many other smaller textile companies that are doing immensely well. One thing that had happened over the last 2-3 months or so, Abha, everybody was looking at the metal space. You remember our early morning conversations on gold and silver every day?
Yes, every single day.
So all that money actually came from these sectors that were taken to the cleaners for no fault of theirs, because money is finite, you move from one to the other. And now the money is moving back in thanks to a tailwind provided by the budget. So a textile space is worth looking at. Also, please show Himmat Singha Textiles. Please show Gokul Das Exports. These are all fabricators, exporters, which may do well on the market as well. Abha.
Okay, let me go across to Gaurav as well. Gaurav, in terms of, we've been looking, of course, at the kind of reaction across the board. In terms of money markets, what's your sense? Is that an area that you're concerned about as well, with the pressure building up on the currency? We're not completely able to get a sense today, being Sunday, but how much of a concern is this to you?
So I think pressure on the rupee is largely because of the trade deficit, which has been growing. Our imports have been this thing surging. Exports, obviously, have been slow. So there's been a lot of demand for for this thing dollar. This thing supply is less. So that is what is putting this pressure on the rupee. Apart from the fact that you have these outflows from from FIIs, FDI has been inflows have been extremely muted. So given these two larger factors, rupee will remain under pressure. Having said this, on a REER basis, which is the real effective rate of this currency, rupee is no more expensive. In fact, it has come down to a very, very undervalued zone. So hopefully, if this things stabilize, or if we have some progress on the India-US trade deal, I think the fall in the rupee will get this in control and limited.
Okay. Well, the trade deal seems to be pretty elusive at the moment, even though of course, we'll keep hearing the rhetoric that it's on the way, and it possibly is, but who knows how soon that will happen. All right, we'll keep that on our radar, of course, but there's a clear alignment towards increasing ease of doing business, digital transactions, move towards AI. And of course, we talked about data centers. So, definitely progressive and aligned with, also looking at tech progress and trying to, increase the efficiency and ease of doing business as well. Gaurav, would you say when we look at it from that point of view, we were talking about e-commerce earlier, but even some of the tech companies are all likely to benefit. Nifty IT is now up over 1% this afternoon.
Vivek. Hello. So I think IT is doing well because of the safe harbor changes which has been done. And second, the mid-cap IT has been outperforming anyway for past about year and a half. That is because the niche IT players in the this mid-cap space have been showing a much steady and a healthier growth compared to the large cap IT companies, which are struggling to fine tune their business model because of the changes that are happening in the macro environment, business environment globally. So I think mid cap IT will this thing continue to do well, though the valuation there compared to the large cap IT are on the premium side, but I think that premium is very well this is justified.
Right. Thank you, Gaurav, for spending your time and, of course, sharing such wonderful thoughts on the market. We now welcome Mr. Dhirendra Kumar, CEO at Value Research, a person who looks at the entire equity space with a kind of calmness that's unbelievable. He will narrow down what looks good, what looks better, and what is best for investors in the longer term. A very warm welcome to you, Dhiren. Your first thoughts on
Thank you, Shailendra.
How the budget panned out and what is good for us in this document.
The good for us is that we are still a growing economy. The good for us is that, we have not borrowed our money to poverty. We are not going bankrupt. I have been, a votary of doing uninteresting things, doing boring things when it comes to financial stuff. And this is what it is. It's a very boring budget, nothing interesting. If you are making 12,75,000 rupees last year, it was tax-free, it remains so. Some tweaks here and there, and mention of AI 10 times in the budget speech is just interesting. Some incentives here and there, tweaking. And one thing which looked clearly, what actually dragged the market soon after.
और भारत के उज्जवल भविष्य की नींव को सशक्त करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। जो पाथ ब्रेकिंग रिफॉर्म्स किए गए हैं, वो एस्पिरेशन से भरे हुए भारत के साहसिक, टैलेंटेड युवाओं को उड़ने के लिए खुला आसमान देते हैं। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये करोड़ों देशवासियों का संकल्प है दुनिया के एक ट्रस्टेड डेमोक्रेटिक पार्टनर और ट्रस्टेड क्वालिटी सप्लायर के रूप में भारत की भूमिका लगातार बढ़ रही है। हाल में जो बड़ी बड़ी ट्रेड डील्स भारत ने की है, मदर ऑफ ऑल डील्स, उसका मैक्सिमम बेनिफिट भारत के युवाओं को मिले, भारत के लघु और मध्यम उद्योग वालों को मिले, इस दिशा में बजट में बड़े बड़े कदम उठाए गए हैं। साथियों, इस बजट में मेक इन इंडिया और आत्मनिर्भर भारत अभियान को नई रफ्तार के लिए महत्वाकांक्षी रोड मैप प्रस्तुत किया गया है। इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमईज तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है। एमएसएमईज को, हमारे लघु और कुटीर उद्योगों को जो समर्थन इस बजट में मिला है वह उन्हें लोकल से ग्लोबल बनने की नई ताकत देगा। साथियों, बजट में इंफ्रास्ट्रक्चर को मजबूत करने के लिए कई बड़े कदम उठाए गए हैं। डेडिकेटेड फ्रेट कॉरिडोर, देश भर में वाटरवेज का विस्तार, हाई स्पीड रेल कॉरिडोर, टियर 2 और टियर 3 शहरों के विकास पर विशेष ध्यान और शहरों को मजबूत आर्थिक आधार देने के लिए म्युनिसिपल बॉन्ड्स को बढ़ावा। ये सारे कदम विकसित भारत की यात्रा की गति को और तेज करेंगे। साथियों, किसी भी देश की सबसे बड़ी पूंजी उसके नागरिक होते हैं। बीते वर्षों में हमारी सरकार ने देश के नागरिकों के सामर्थ्य को बढ़ाने पर अभूतपूर्व निवेश किया है। हमारा प्रयास स्किल, स्केल और सस्टेनेबिलिटी को निरंतर बल देने का रहा है। जैसा कि आज पार्लियामेंट में निर्मला जी ने कहा है, यह युवा शक्ति बजट है। उसमें युवा की सोच भी है, युवा के सपने भी हैं, युवा का संकल्प भी है और साथ साथ युवा की गति भी है। बजट में जो प्रावधान किए गए हैं उससे अलग अलग सेक्टर्स में लीडर्स, इनोवेटर्स और क्रिएटर्स तैयार होंगे। मेडिकल हब्स के निर्माण से, एलाइड हेल्थ प्रोफेशनल्स के माध्यम से, ऑरेंज इकोनॉमी यानी ऑडियो विजुअल गेमिंग को बढ़ावा देकर, पर्यटन को प्रोत्साहन देकर और खेलो इंडिया मिशन के माध्यम से युवाओं के लिए नए अवसरों के द्वार खुलेंगे। भारत को दुनिया का डेटा सेंटर हब बनाने के लिए टैक्स में बड़ी छूट की घोषणा भी की गई है। मैं भारत के युवाओं को विशेष तौर पर इस बजट की बहुत बहुत बधाई देता हूं, क्योंकि इससे एम्प्लॉयमेंट जनरेशन को बड़ा बूस्ट मिलेगा। मुझे बहुत खुशी है कि इस बजट में टूरिज्म और विशेषकर नॉर्थ ईस्ट में टूरिज्म को बढ़ावा देने के लिए भी ठोस कदम उठाए गए हैं। भारत के अलग अलग राज्यों को ताकतवर बनाकर संतुलित विकास की नींव भी इस बजट में मजबूत की गई है। साथियों, हमारे देश में 10 करोड़ से ज्यादा महिलाएं सेल्फ हेल्प ग्रुप से जुड़ी हैं और बड़ा सफल अभियान रहा है। महिलाओं द्वारा निर्मित, महिलाओं द्वारा संचालित सेल्फ हेल्प ग्रुप्स का आधुनिक इकोसिस्टम बने, बजट में इसे प्राथमिकता दी गई है। कोशिश यही है कि हर घर लक्ष्मी जी पधारे। हर जिले में छात्राओं के लिए नए हॉस्टल बनाने का अभियान भी शिक्षा को सुलभ बनाएगा। साथियों, भारत की कृषि, डेयरी सेक्टर, फिशरीज, इन्हें हमारी सरकार ने हमेशा सर्वोच्च प्राथमिकता दी है। इस बजट में भी नारियल, काजू, कोको और चंदन की पैदावार से जुड़े किसानों के लिए अनेक अहम कदम उठाए गए हैं। भारत विस्तार एआई, इस टूल से किसानों को उनकी भाषा में जानकारी मिलने से उन्हें बहुत मदद मिलेगी। फिशरीज और पशुपालन में उद्यमिता, उसको बढ़ावा देने से गांव में ही रोजगार और स्वरोजगार के और ज्यादा अवसर बनेंगे। साथियों, ये बजट एम्बिशियस भी है और ये बजट देश की एस्पिरेशन को भी एड्रेस करता है। मैं एक बार फिर निर्मला जी और उनकी पूरी टीम को इस फ्यूचरिस्टिक बजट के लिए, संवेदनशील बजट के लिए, गांव, गरीब, किसान का कल्याण करने वाले बजट के लिए बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
तो अशोक, प्रधानमंत्री
Dhirenji, can you hear me?
Can hear you, Shailendra.
Please continue with your thoughts. I think you're on mute.
No, I'm not. Just check at your end.
Yeah, it's better now. Please continue.
Okay. Yeah, I was actually, started thinking little differently when Prime Minister was saying that, they are working, they have, earmarked resources for Khelo India, Khelo. On the other hand, what has happened, as for an active trader, STT on futures increased by 150% and on options by 50%. This is actually pulling people away from Khelo India, Khelo in the market. This will be a big dampener and it's good news. Raising transaction costs significantly, options STT from 0.017 to 0.025. It's a big thing, 150% on futures and 50% on options. So what SEBI has been coming out with all over these years, 92% people losing. Now maybe, with these costs, if people don't really become, and that is encouraging long-term investment. People should not participate in the market for a few days and on an intraday basis. And this is something which was completely unexpected. Everybody was talking about a reduction, and we have seen a big jump here.
Also joining us, our common friend, Mr. A. Balasubramanian, the CEO at Aditya Birla Sun Life Asset Management Company. Good afternoon to you, sir. For a bond trader, which you are a very well-known one, what do you see are the changes that have happened in this budget? And of course, how do you see this document helping capital markets as such?
Of course, I see is a good budget. I think if you look at the overall, the approach that they have taken, especially building long-term sustainable growth in the country, focusing on multiple sectors, including MSMEs, as well as health sectors and tourism, and even the manufacturing sectors in continuing what the support they used to give earlier, and now expanding that definition to other sectors, including energy sectors. That's something I see as a good long-term growth, sustainable budget. Secondly, they also give a lot of visibility in terms of taxations, especially giving a data centers 2047 up to 2047 tax holiday. This is something over in the past it has happened. That one they are giving very clear visibility for taxation structures so that they can come freely. And third is the safe harbor mechanism they have introduced, especially for GCC and other such industries. Also giving a clarity in terms of taxation, which has been sometimes that becomes one of the point of discussion when somebody wants to build. So in that sense, I would say give big mark for the budget, focusing on the long-term sustainable growth for India. With respect to the bond market, I think the borrowing program, the gross borrowing is about 17.1 lakh crore, which is higher by about 47 crores compared to what the market is expecting. But however, they have stated that net borrowing would be about 11 lakh crores, which is more or less at par with the last year number. Therefore, ideally speaking, the bond market should not see much impact. Today, the bond market was closed. Therefore, we couldn't see the immediate reaction in the bond market, both in the currency market and this, I'm sure will be known tomorrow. But as it stands today, the expectation about 3 or 4 basis points reductions in increase in yields because of this confusion that exists. But otherwise, my own belief is the divestment target that we have put, this time the divestment target is not by way of selling shares. I think it looks like it will come through the monetizing the real estate asset that the public sector companies are owning it. I think some bit of revenue will come from there, as well as the RBI receipt, about 3.5 lakh crore they are taking. Also would ensure that the borrowing program doesn't, is more or less maintained the same level last year. So as for the equity capital market concerns, the STT increase, it's actually in a way I see as a positive. And given the fact that the people have been trading in the F&O market and not only losing money, they also pay higher STT transaction tax. They can now shift towards either the cash market or the mutual fund investors. Okay. I see as a positive on that front.
So two people, ladies and gentlemen, have publicly said that the 150% increase on tax on futures trading on STT and a 50% increase on options are actually good things which they are very keen on. Dhirendra, coming to you, you also run a wonderful research outfit for stock picking. With this budget document in front of you, the sectors that the government is now focusing on, plus the fact that REITs and InvITs have been given a fillip, what are things that are coming to your mind when your research team sits with the document today? What are the thoughts that you're looking forward to in terms of newer and better stock picks for the next 2 years or so?
The devil lies in detail, and that will take some time for us to decode. We are going through the document in great detail, and the market has the tendency to discount the future immediately or instantly. And in that way, broadly speaking, if you look at the decline in the stock prices of the brokers and the exchanges, it's quite understandable. That is the business model. They make money when people trade. And if the whole design is to discourage trading of an unnecessary kind, they're going to be... So the negatives are clearly visible. And one thing which comes out very clearly as a result of the broad number that has come up, the spending mix of the government, yes, or the, we are looking like such a stable economy. The revenue deficit is stable at 1.5%. Effective revenue deficit, half to 0.3% from 0.6. That is real. If I have to look at these numbers as a company, I'll be very impressed with the cash flow.
To both you gentlemen, Bala sir, first coming to you, the macro balance sheet was strong, and that's visible in the economic survey as also the budget document. Now, with this global turbulence that we see and the record low that we have on the rupee, do you think there are some steps taken in the budget to stem the flow of the rupee at this point of time, which may in turn help foreign institutionals to at least pause their sell mode? Bala sir, first to you.
In the step that is being considered is to make investment destination of India more attractive, such as the safe harbor measures is to attract more FDI investment, and giving a data centers tax holiday is again to bring in people like Google and others come to India, make India as a hub for the data center, not only produced for India through the subsidiary companies, even for taking the service to the global market. This, in my view, is the focused on FDI. And second is giving importance for certain sectors like textiles, giving them some kind of incentive for the sectors, again as export-oriented sectors. I think they have mostly focused on more on business-related stuff rather than portfolio-related stuff. With respect to portfolio-related stuff, I think they have made a clear definition on PROI, which is a person of overseas origin. And then the ownership on companies, it was earlier 5%, 5%, 10%, or 10 has been made to 24%. Anybody who is actually overseas investors who wants to own a single company exposure, either collectively or singly, at about 24% they can own. This, in my view, not only give a clarity for the ownership coming from overseas companies, overseas investors, it can also actually bring in more overseas investments into specific companies to own large chunk of them without getting worried about the regulatory framework. And the last, of course, is something they also done is to develop a gift city, which is again part of India. They have given a tax holiday for 20 years. If somebody set up a unit in a gift city, not many people talk about it, but it's something which has come in the budgetary provisions where earlier the tax holiday about 10 years. Now the tax holiday has been extended about 20 years. Therefore, there are more and more asset management companies can be encouraged to actually look at gift city as an alternate to the IFC centers in which they are operating, either in Hong Kong or Singapore or London or even the Dubai. I think they can seriously look at gift city as an alternate. Therefore, the world can actually make gift city as a more of a base for the global asset management business or investment business. And that's something also I see as a big change in the budget. Therefore, the rupee dollar, I think, is something related to the current turmoil that we are seeing in the global market. But I'm sure with these changes, Reserve Bank of India may put their act to right. The next policy which is coming in, they may even address it next week that is coming in. They may address that as well.
Right. Thank you, Bala sir, and we look forward to engaging with you again next week once the budget document is discussed and detailed a bit more. Thank you for your time, sir. Dhirendra, coming back to you, two very important questions which are now niggling mutual fund investors, traders at large. What happens to the silver market? What happens to the metal space? You and I have seen these rallies, these speculative jumps that often happen. What should investors be doing now for those who have entered into the silver and gold ETFs recently?
You can't do anything because the market is stuck. And, going by what has happened in the market while the markets are closed, and today it's open, but these trades are not possible today in the ETS. So you can't do much. You just have to carry on. And it looks like most investors, when it comes to investing in these, investors chase recent great momentum. And most investors caught in the month of, once they realize that they have missed it, and the scale of money that came in the month of December, looks like many investors will be stuck there. You can't get out of these ETFs. And I think it is also about time that investors should look at having these metals as part of their long-term portfolio. If it was such, then think in terms of, there might be correction, you might be stuck. If it was a speculative thing, get out of it, spur up your losses because it is going to be very turbulent. But, and right now, the market dynamics is such that because of the short trade and the covering and all that, the market, the trading dynamics is extremely unfavorable.
Yes.
And I don't know if you can work on some plan. But many investors, historically, I have said that, never have gold as a very long-term part of it. It's not a productive asset. Now I'm changing my mind as, most central bankers went about accumulating, the de-dollarization. It started gaining strength at such a scale that I would like investors to have, something like 2% to 10% allocation to these, and substantially gold, more as a diversifier, not as a performer. Right now, investors are chasing it as a performing asset. So if you can think of it like that, fine. Otherwise, square up your losses, go back home.
That's a very sage, practical and brutal advice that is coming from one of the most longest term advisors and watchers of the market that I have had the pleasure of interacting with. Dhirendra, my final question to you. Now that a major event is over in our lives as financial analysts and investors, how do you construct a fresh mutual fund portfolio for a person who's entering the market, wants to invest 10 lakh rupees, is looking for creating long-term wealth? How much, where?
If you are investing 10 lakh rupees and you don't need that money for 5 years and more, I would urge anybody, because, we are living in very eventful times. We are not the market stability is missing, and it's only accelerating. So I would like anybody to be investing 10 lakh rupees, a lakh of rupees every month. Choose 4 multi-cap fund. I'm not saying flexi-cap fund. It will give you a broad exposure of the fund, of the market, or maybe three multi-cap fund and 25% of your money, 25,000 rupees to be invested in something that you like, because many people have their own likings, dislikings, but make sure that you're investing in a fund which has 3 to 5 years of credible history, has been able to withstand a big decline, and build a portfolio of 4 funds to be invested over the next 10 months.
Okay, did you say 3 multi-cap funds and another 25?
I said, 3 multi-cap funds of 3 separate fund companies, so that you have a diversification of a fund manager as well.
Okay. Do 3 come at the top of your mind?
No, I'm unable to list them, and I think it will be improper to list 3.
So we leave that for a different program. And your final thoughts that you might have on the market in general. I know you don't track it on a regular basis, but are we in a dislocated environment? Are times getting tougher for equity investors? Do they need to...
No, not at all.
Okay.
Not at all. In fact, I would say that these are very useful time for most investors, because if you are a long-term equity investor, you need intermittent corrections of severe kind to profit from it. And that is where traders get trapped. That is where short-term investors get trapped. That is when, the way for you to buy low and selling high is only time is on your side. And for short-term investors, you don't have that luxury. So keep calm, carry on, think long-term. And make sure that you are diversified. You are not getting attracted to the fashionable thing, the fads of the market. And that is where investors will be disappointed when they start chasing the recent performance, chasing recent past performance and getting stuck.
Okay. One thing that's marked out the last 18 months or so is the resilience or maybe the patience of investors in the small cap and the mid cap fund space. On a regular basis, we've seen SIPs being continued. Do you see something to the tune of, the last straw on the camel's back, which was this budget? How do you see this space at this point of time? Should investors continue with their SIPs?
Absolutely. In fact, the reason why the SIPs are carrying on, or they are not discontinuing, the scale is rising, and scale is rising month after month, is not because of market volatility, because investors have chosen a path where they don't get upset. Only when you invest 10 lakh rupees, 15 lakh rupees, 1 crore rupee, and then see the market tumbling, investors are not looking at the values on a month-on-month basis when you start your 10,000 rupee SIP with a UPI mandate.
Also, in terms of this budget's roadmap towards, improving the taxation part, you know, the niggling things that happen between an IT officer and a tax payee. Do you see that being harmonized? The finance minister spent considerable time on detailing how the new regime will now be better in terms of, you know, less interaction between authorities and taxpayers. Do you see that actually panning out?
Yes, I think it takes the pressure off. You know, you don't have the deadline of December 31st. You have time till March. You can revise it. You can pay a fees. You know, having a mechanism of, you know, some mistake, procedural mistake, some omissions, which you can fix it, and enabling a provision like that. The whole decriminalization of silly mistakes which we do in our accounting, in our reporting.
Dhiren bhai, we'll just interrupt in a while. The CEO of the National Stock Exchange, Mr. Chauhan, is offering his views on the budget. Just hold on for a moment, please.
Already, महाराष्ट्र के मुख्यमंत्री जी एजुकेशन हब के ऊपर भी कार्य कर रहे हैं और कई ऐसी चीजें जिससे इंफ्रास्ट्रक्चर भी मुंबई महाराष्ट्र का भी बहुत बढ़ने वाला है. तो ओवरऑल ये ग्रोथ ओरिएंटेड बट फिस्कली कंजर्वेटिव बजट पे कहूँगा.
एसटीटी के हमने देखे जो फिगर्स बढ़ाए गए हैं एफएनओ पे, तो कितना असर आप देखते हैं उससे?
एक तरह से जो अमाउंट बढ़ाया गया वो 0.05%, 0.02% से लेकर के वो फ्यूचर्स के लिए और ऑप्शंस में भी एक छोटी सी बढ़ोतरी करी गई है. तो ओवरऑल मार्केट उसको अपनी स्ट्राइड में लेकर के धीरे धीरे एडजस्ट हो जाता है और आगे जाकर के भी भारत माने जो भी एसेट्स हैं, जितने भी स्टॉक ब्रोकर्स लिस्टेड या एक्सचेंजेस लिस्टेड, उनकी जो एसेट क्वालिटी है उस पर कोई खास असर नहीं पड़ेगा क्योंकि भारत का जो ग्रोथ मोमेंटम इतना ज़्यादा है कि जिससे ओवरऑल ज़्यादा से ज़्यादा लोग भारत में स्टॉक मार्केट में भी निवेश करते हैं और उसकी वजह से ज़्यादा से ज़्यादा लोग दूसरे इंस्ट्रूमेंट जो है फ्यूचर्स, ऑप्शंस, बॉन्ड, रीट्स, इन्वेस्ट वगैरह में सब में निवेश करना चाहते हैं. तो ओवरऑल एनएससी की आईपीओ भी उसका खास असर नहीं पड़ेगा और जो आज ऑलरेडी लिस्टेड कंपनी है उन पे भी उनका खास असर नहीं पड़ेगा.
टीडीएस और टीसीएस की बात करें, उनके जो डिटेक्शन है उसे आप किस तरह से देखते हैं?
तो एक तरह से टीडीएस और टीसीएस में जो पहले बढ़ोतरी हुई थी उसको कम किया गया है. तो जो बच्चे बाहर पढ़ने जाते हैं या तो जो टूरिज्म के लिए जाते हैं या मेडिकल के लिए जाते हैं उनके लिए और उनके जो माता पिता है उनके लिए बहुत महत्व की बात है. और एक जो फॉरेन एक्सचेंज का मैनेजमेंट में नया फ्रेमवर्क लाने भी आदरणीय वित्त मंत्री जी ने बात की है. तो मुझे लग रहा है कि एक तरह से ओवरऑल बहुत कॉन्फिडेंट फॉरेन एक्सचेंज मैनेजमेंट में.
That's the Chairman Managing Director, Mr. Ashish Chauhan of India's largest exchange, the National Stock Exchange. With that, ladies and gentlemen, we'll shift focus a bit on what this budget has done for the markets as also for investors. Dhirendra Kumar was with us for a while. He suggested a lot of very practical things that we can do post this document. Thank you, Dhirendra, for your inputs. We'll definitely get back together once the fine print is adjusted at your end. And joining us now, ladies and gentlemen, is a market veteran, Mr. Anand Rathi, founder and chairman at Anand Rathi Group, a gentleman who has definitely seen more than 40 budgets. Rathi साहब नमस्कार, आपका बहुत बहुत स्वागत है. सिर्फ दर्शकों की जानकारी के लिए कितने बजट गुजर गए आपके सामने से?
नमस्कार. मेरे सामने तो भाई मैंने तो 50-55-60 बजट देख लिए हैं. तो
और
तो
इसी
आपका कहना सही है
जी, इसी तजुर्बे को और इसी नज़रिए को राठी साहब इस्तेमाल में लाइए और बताइए इस बजट में आपको क्या अच्छा लगा, क्या और बेहतर हो सकता था और क्या पसंद नहीं आया?
देखिए, मेरा तजुर्बा एक तो ये बताता है कि जब भी कोई बजट आता है तो उसके नेगेटिव्स पे जल्दी से ध्यान जाता है और पॉजिटिव को समझने में थोड़ा समय ज़्यादा लगता है. तो यही इस बजट में हुआ है कि इस बजट में जो एसटीटी बढ़ाई गई है, जैसे उसका अनाउंसमेंट हुआ मार्केट एकदम नीचे जाने लगा और नीचे गया और उसका इम्पैक्ट जो है अभी भी मार्केट में लग रहा है. क्योंकि मुझे लगता है कि हालांकि वित्त मंत्री जी ने बोला नहीं कि भाई पर्पज ये है कि वो चाहते हैं कंटिन्यूस एफर्ट्स है कि लोग एफएनओ में नहीं जाएं जी, इसलिए शायद कॉस्ट बढ़ाने की वो हुई है. परंतु शायद वो अवॉइडेबल था, क्योंकि एट द एंड ऑफ द डे एंट्री बैरियर करने के लिए और कई तरीके हैं. एक मिनिमम कैपिटल रिक्वायरमेंट किस लेवल के लोग कर सकते हैं, सब मार्केट्स में वो बेस ज्यादा होता है. परंतु हैविंग सेड दैट, अब मैं बात करूंगा कि इस मार्केट में क्या अच्छे हुए हैं. मैं समझता हूँ कई चीजें मार्केट में आज जो सर्कमस्टांसेस जिसमें अपने गुजर रहे हैं, आज यूएस की जो सिचुएशन अपने वर्सेस इंडिया है, जो टैरिफ की अनसर्टेनिटी चल रही है, और जिस तरह के हालात में अमेरिका इंडिया को फेवर नहीं करके डिस्टर्ब कर रहा है, उसके बावजूद भी मार्केट में देखिए क्या अच्छी चीजें. मैं हमेशा ये ध्यान देता हूँ कि अच्छी चीज को पहले देखो. तो एक तो अच्छी चीज है, देखिए फिस्कल डेफिसिट इस साल भी बड़ा नहीं है, इन स्पाइट ऑफ इनकम टैक्स में काफी रिलीफ दी गई लास्ट ईयर, जीएसटी में रिलीफ दी गई. उन दोनों इतनी बड़ी रिलीफ के बाद भी फिस्कल डेफिसिट नहीं बढ़ा है, वो मेरे ख्याल से बहुत बड़ी चीज है. और अगले साल भी फिस्कल डेफिसिट जो है 4.3% की जो घोषणा की है, वो भी बहुत अच्छी है, क्योंकि नेक्स्ट ईयर में भी देखिए टोटल रेवेन्यू की ग्रोथ करीब 10.1% के आसपास ली गई है. 7% का जीडीपी ग्रोथ की बात की गई है. वो अब दुनिया में भी सब लोग कह रहे हैं कि इंडिया में 7% डिजिटल ग्रोथ जीडीपी ग्रोथ आ सकती है 6.5 के बजाय. इन्फ्लेशन कम होने से नॉमिनल ग्रोथ कम रह रही है. अब इन्फ्लेशन अगर वापस थोड़ा सा बढ़ेगा, मुझे लगता है अगले साल, तो नॉमिनल ग्रोथ बढ़ेगी. तो आप, और बजट में खास बात यह है कि हर माइन्यूटेस्ट डिटेल्स में वित्त मंत्री ने कहा कि कहाँ स्टेप्स लेना है, किस इंडस्ट्री को हेल्प चाहिए. एसएमई के लिए बहुत अच्छा है. तो मैं तो इस बजट को कहूँगा कि ऑन द होल, बारिंग एसटीटी जो नहीं एक्सपेक्टेशन नहीं थी वो हुआ. कैपिटल गेन्स में देखिए बाईबैक का जो प्रोविजन आया सैलन जी, बहुत मतलब लास्ट टाइम गलत हुआ था, अब उसको ठीक करने की कोशिश की गई. ठीक है, थोड़ा इम्पैक्ट प्रमोटर्स के ऊपर इन्होंने ज्यादा रखा, क्योंकि उनको लगता था भाई प्रमोटर्स एडवांटेज ले रहे, परंतु रियल एडवांटेज तो आम निवेशक को मिलता था. तो कई अच्छे पॉइंट इसमें हैं बजट में, और मैं समझूंगा कि ओवरऑल बजट उस दृष्टि से अच्छा बजट है.
राइट. राठी साहब, आपका बहुत बहुत शुक्रिया इस विस्तार से बताने के लिए. और साक्षी मेरे साथ स्टूडियो में जुड़ी हुई हैं. सबसे पहला मेरा उनसे प्रश्न था कि कितने बजट राठी साहब आपने देखे. उन्होंने कहा 55 या 60.
Wow. Which one has been your best budget that you've seen?
देखिए, नहीं, I don't remember which one is best, but obviously I think more important is कि जैसे जहाँ टैक्स पे रिलीफ हुई, जैसे इनकम टैक्स कम हुआ, one big budget was corporate tax से 25% पे लाया गया. That was a big budget. उसके पहले जब marginal rate of tax, जब मैंने अपना कैरियर चालू किया था, तो used to be 80% marginal rate of tax. When in one budget it was brought down to 30%, I mean over a period of time. तो वो बजट एक जबरदस्त बजट था कि भाई पर्सनल टैक्सेशन 30% के ऊपर नहीं होना चाहिए. तो मैं मानता हूँ कि जैसे जैसे लोगों को, एंटरप्रेन्योर्स को बड़ा मिले हुए, टैक्स को रीजनेबल लेवल पे रखा जाए. आज जिस कंट्री में ग्रोथ आई, चाइना वगैरह में कहीं भी 20-25% के ऊपर टैक्स नहीं है, वो मैं समझ जिस बजट में लाया गया उससे कंट्री को बहुत फायदा हुआ.
Thank you so much, Mr. Rathi, and all the very best to you. We will again get an opportunity to speak to you eventually. Let's also welcome another veteran of markets, Mr. Shankar Sharma, founder of G-Quant, and joining in on the program. Warm welcome to you, Shankar. Thank you so much for taking the time out. How disappointed are you on a scale of 1 to 10 with this increase in STT?
I'm not disappointed. In fact, if you see my tweet, which I just put out 10 minutes ago, the budget was singularly made great because of this single move of the finance minister. I wholeheartedly commend and support her that this poison, this cocaine that has seeped deep into India's society should be, I mean, my view, should be stopped for retail investors. There is no business speculating in stock market. You come to buy long-term equity for long-term asset building, not this rubbish like F&O trading, which is just generating brokerage revenue and STT revenues for the parties concerned. This is ridiculous. I think she has done a fantastic job. I hope in the next budget they triple this tax so that this whole malaise, which has infected the smallest of people, just dies a natural death. It cannot be stopped, obviously, but it should be killed slowly. I think they are on the right track.
Good afternoon to you, Shankar, and a very warm welcome. What part of the global geography are we seeing you from? That's my first question. And the second question is, how does the overall budget document look to you, given that 7 sectors has been chosen and the fact that a clear tax holiday has been provided to global data centers? How do you see these two moves?
नहीं तो आपका पहला सवाल का जवाब आपको चाहिए कि मैं सिर्फ सब्सटैंटिव सवालों का जवाब दूं?
नहीं, पहले का तो बहुत जरूरी चाहिए, तो ये पता चलेगा कि शाम को हम लोग मिल रहे हैं या नहीं।
शाम को अगर आप दुबई में होंगे तो बेशक आप जाता है। फिलहाल मैं दुबई में ही हूँ। और जहां तक रही बात इस चीज की कि जो डेटा सेंटर्स के ऊपर इंसेंटिव्स मिले हैं और बाकी चीजों के ऊपर जो आपने बोला सात इंडस्ट्रीज के ऊपर, they're all fantastic moves. I mean, frankly speaking, these are long-term moves. Stock market एक short-term mechanism है, engine है, उसको long-term से कोई लेना देना नहीं है. It will react the way it is going to react. There is no two ways about it. But the fact is, if you look at 5 years out, all these moves will bear a lot of fruit. So there is a short term, there is a long term. The short term, we got boosts enough through the GST cuts in the last in last year, the corporate tax cut of 2019, the personal income tax of the last budget. अब और क्या आप उम्मीद कर रहे हो personal taxation? But now we have to make capacity building for the future. I think that's what she has done.
Okay. Shankar, what do you think the FIs will be happy looking at this budget? Will they finally make their way back to India? They have been evading us. And how, like in 2025, we have seen 3 lakh crore rupees worth of money being pulled out on the cash market, 40,000 crores in January ahead of the budget. What do you expect now?
I don't think the FIIs are going to be enthused by the budget, because for them, the budget is more a long-term document. Remember, everybody is ultimately more a 12-month investor. Rest is all, easy talk for, making good headlines. But otherwise, ultimately, people live, frankly, many people live. Daily NAVs are there. So we have to perform on a daily basis. In my view, FIIs are unlikely to change their view on India because of this budget. Frankly, this budget doesn't do anything for or against the India case that they might have built in their heads. I think FIIs will be, generally speaking, finding better options elsewhere in the world. I don't think this budget does anything to change that perspective, which is why we have seen the numbers from them being what they are.
Fair point. For an investor who wants to put in fresh money and that lot is decreasing by every passing day, Shankar, what would make sense? Should they look for overseas investments via ETFs, which are now very popular in India, or should they focus domestically?
So my view is the ETFs in India, as far as I know, they are already priced at a big premium, the foreign ETFs in India. So if they are already at a premium, I don't think you're going to make much money incrementally, because if the premium is, 10, 20, 30%, then it's already pricing in a 30% move in global markets, which is not going to happen that quickly. So there is a lot of inefficiency or a barrier to a lot of local domestic capital to escape from India and invest overseas. I don't think that's going to be eased up by the Indian government anytime soon, given the pressure of outflows on variety of counts, be it on the FDI front, where big sales have happened, big exits have happened. IPOs where promoters and founders and VCs have cashed out. And of course, the secondary market sales from the FPI. So I don't think the government is going to give you any concessions and relaxation for investing money overseas in overseas equities. I think the best options for Indian investors are to buy gold, silver, and the non-equity related foreign exposed elements. And that people who did that in the last 2 years have benefited handsomely. But I don't think Indians can easily invest overseas as we speak right now.
Okay. Shankar, this budget has been presented at the backdrop of a lot of tariff-related uncertainty, geopolitical tensions as well. Do you think this budget has done enough to guard our economy against any of these external shocks for the rest of 2026, given the sense that Donald Trump is still at the helm and there could be many more shockers that could be coming in?
I don't think anything has been done, and I don't think anything can be done either. What do you do when things can suddenly go from 9%, 10% tariff to 25, then 50, then suddenly 500? You can't deal with a volatile bunch of policies. There has been no predictability to American policy towards India. I don't think the government can prepare for the unpreparable. I mean, what do you do? So I think the only option left for India is to sit down and do a graceful negotiation and finish this thing off on the trade front. Although I must add at this stage, I don't think that will have any material lasting bearing on the stock market. I just want to be very clear about it.
Okay.
That a trade deal with America will in no way alter the trajectory of the stock market, barring, a day or a week of, a sharp upward rally. I don't think structurally anything will change for Indian equity markets should the trade deal actually come through.
Okay, what is the trajectory of the Indian equity market at this point of time, according to you?
When you ask a question which has not a good answer, you should not ask it.
Okay, I get your answer. Now, in the previous answer, you mentioned that we should stick to gold, silver. So this very sharp speculative bout that has shaved off a lot of speculators from the market, are entry points in rupee terms for gold and silver sensible to you, or is there still a downside?
No, you should buy all the dips in gold and silver. There will be massive immediate crashes of the kind we have seen in the last couple of days. That's any trending commodity or security or market will have sharp cutbacks, but I think they're structurally in a bull market. And I don't think we should attach too much importance to these kinds of sharp corrections. More than Indian equities, I would favor gold and silver, even copper over Indian equities at this point. I'm not talking individual stocks. There are plenty out there. I'm talking main headline indexes. I don't think you will make much money, if any money at all, buying Indian broad basket or an index, but you will still make money buying gold and silver and copper.
Okay. How do you see the appointment of Kevin Warsh as the new Federal Reserve Chair by Donald Trump? What kind of a trajectory do you think central bank policies will have to take now, looking at this change at the helm, looking at two factors? One, that he's always known as an inflation hawk, and second of all, that it could be largely on the understanding of how Trump wants the policies to go from here. How would you really see it?
So there's a very nice, very, very erudite and learned economic journalist, Vivek Kaul, who put out a very nice tweet yesterday, which I was reading, and he correctly pointed out that the Fed chief, while ornamentally appears to be the man making all decisions, is actually a monetary policy committee, and he's only one vote himself versus 11 other votes. So to expect that one guy will be able to influence 11 other people is a bit of a stretch. And of course, philosophically, he's a hawk rather than a dove. So I don't think it's so easy to conclude that he will start cutting interest rates and, reverse the whole relatively tight money policy of Powell. In any case, Powell can also continue for a very long time as a committee member, even though he may not be a governor. So he's explained beautifully in that tweet of his, which I strongly recommend all of you must read. He's explained the way the structure is and what the laws and the norms are. So I don't think it seems simple to conclude that Warsh will come and completely reverse whatever Powell was doing, because he's just one out of 12 people.
Right. Thank you, Shankar. As always, it's such a pleasure to talk to you, and looking forward to catching up with you somewhere in the Indian geography. Thank you for your time.
Sure thing, sir. Hopefully soon. Thank you.
Yes.
Thank you so much.
And joining us on the show is the one and only Vijay Kedia, a very well-known investor and a wonderful singer and a practitioner of great stock picking. Namaste Vijay ji, बहुत-बहुत स्वागत आपका.
नमस्ते सर, नमस्ते
जी.
नमस्ते विजय जी. आपने कल एक ट्वीट किया था जिसमें आपने हमारे पिछले साल के बजट इवेंट का आपने जो गाना गाया था फाइनेंस मिनिस्टर के लिए, उसका आपने कल ट्वीट किया, जिसमें आपने खास तौर पर अपनी लाइन बोली थी जो आप बेहतर गाएंगे, मैं सिर्फ बोल देती हूँ, डिविडेंड पे टैक्स लगाती हैं क्यों बार बार. इस बार तो एफएनओ के ऊपर और एसटीटी लग गया. आज क्या गाना गाएंगे आप?
आज वही गाना गा रहा हूँ सुबह से कि दिल के अरमा आंसुओं में बह गए, हम वफा करके भी तन्हा रह गए, शायद उनका होगा क्या आखिरी ये सितम, हर सितम ये सोच के हम सह गए, दिल के अरमा आंसुओं में बह गए.
तो ऐसा है केडिया साहब, देखिए हम लोग लंबी अवधि के निवेशक हैं और ये सब झटके जो हैं लगते रहते हैं. आप खुद ट्रेडिंग से परे हैं, बड़े लंबे निवेश रखते हैं और बहुत दूर की सोच बाजार में आप प्रेरित करते हैं लोगों को। बताइए कुछ पसंद आया हो इस बजट में। एसटीटी को ज़रा बाईं तरफ रखते हैं थोड़ी देर के लिए, लेकिन कुछ तो ऐसा होगा जो आपको पसंद आया होगा।
नहीं, ऑफ कोर्स एसटीटी को छोड़ देना चाहिए, क्योंकि वही जीवन नहीं है और वही कोई इकोनॉमी नहीं है। हमारे $4.5 ट्रिलियन की इकोनॉमी है, वो कोई एसटीटी पे डिपेंडेंट नहीं है। तो वो इकोनॉमी अलग चीज है और एसटीटी जो उन्होंने लगाया वो अलग चीज है। और एसटीटी में जैसे सब जानते हैं रुपया सब खोते हैं। सेबी भी बार बार बोलती है, मैंने भी कई गाने लिखे हैं एसटीटी के ऊपर में, सॉरी फ्यूचर एंड ऑप्शन के ऊपर में, कि हाँ अभी लोग इतना बड़ा रुपया इसके अंदर में खो रहे हैं। तो वो ठीक है, उसको कटेल करने के लिए गवर्नमेंट ने लगाया, ये अलग मुद्दा है। मेरा मतलब खाली और था कि मेरा ऐसा मन में रहता है कि हाँ भी जो हम $4.5 ट्रिलियन की हमारी इकोनॉमी है, अभी हमको एक्शन जो लेनी चाहिए, पॉलिसी जो, हाँ वो
सुनते हैं वित्त मंत्री को। पीआईबी इंडिया पे आ चुकी हैं और अब बोलना शुरू करने वाली है। बिल्कुल।
I also welcome Secretary, Department of Public Enterprises, Secretary Expenditure, Secretary Deepam, Secretary Financial Services, Secretary Expenditure, Secretary Deepam, Secretary Financial Services, Secretary Economic Affairs, Revenue Secretary, Chief Economic Advisor. Friends, first the Honorable Finance Minister will make her opening remarks. Thereafter, we will take some questions. Please remember, identify yourself and your organization's name. And I would request you to ask one question only so that your friends can be accommodated. Thank you very much. Over to Honorable Finance Minister.
Good afternoon. This is the customary press conference that we hold with all the secretaries. You've heard the entire budget being presented in the Parliament. So as opening remarks, I'll just highlight some of the points which we want to draw your attention to. But subsequently, of course, we'll answer all your questions. All the secretaries are here with me. So this budget being the first one, as the Honorable Prime Minister said 2 days ago, this being the first one for the second quarter of this century, also leading towards Vikasit Bharat 2047. We are laying the path and giving a push to the economy to maintain the growth momentum. And for that growth momentum or sustained economic growth, which we want to ensure, primarily we are looking at building the ecosystem with structural reforms which will go on. Reforms have been carried out. We are continuing to do the reform activities, so it will continue with an aim to make sure that we create enough environment for improving productivity and making sure employment is generated. Also, technology, 21st century, this century is completely driven by technology. So we will ensure that technology is brought in to benefit the common man, to make sure common man benefits in the sense of ease of doing living, or for his business to prosper, or for farmers for greater productivity, or better logistics, whatever. So technology for benefiting every common man. And above all, with all this, inclusive development. Sabka Saath, Sabka Vikas, and that is why you heard me bringing in schemes which have good allocations for bringing better health facilities, creating a cadre of people, not cadre in that sense, but a bulk of people who can come in as health workers, paramedics, and so on. And also making sure we are able to provide dignified opportunities for Divyangjan. Mental health has also received a lot of attention. So these are the side for Vikasit Bharat and making sure Sabka Vikas hoega. But the idea is the advantage and the momentum that we gained since after COVID by increasing public capital expenditure will continue. We've announced that 12.2 lakh crores are coming through public expenditure this time. It is 4.4% of the GDP. I'd like you all to please notice that, which is the highest, at least in the last 10 years. It could even be highest if you were to take data earlier. No increment in capital expenditure, sustained fashion, has happened ever before. This one making marking 4.4% of the GDP. Then what are the kind of things which will happen through it? You will have dedicated freight corridors. I've named Dankuni in the east, Surat in the west. Then I've also highlighted that 20 new national waterways, not national highways, national waterways are being planned. And again there, those are going to pass through some of the critical mineral areas. Orissa, where the mineral-rich state, you have the waterways taking it to the port, and the two ports have been identified, Paradip and Dhamra. Similarly, we are also making sure that the coastal cargo movements will be enabled through a cargo route, so that through the coastal area we are able to cut down on cost of movement of goods. City economic regions, developing them is a very big new measure that we're coming up with. And for that, an allocation of 5,000 crore per city economic region. Imagine the amount, 5,000 crores in 5 years. 1,000 crore per year per city is being given, and the emphasis is going to be largely on tier 2, tier 3 cities. And then talking of infrastructure further, with the capital expenditure coming with the big number, you're having also the high-speed rail corridors. 7 of them announced, the destinations are clear, so that they become the bridge for all these economical robust centers. So those are for making sure that the infrastructure and the capital expenditure are getting tied up, and the country benefits from the ripple effects that these can bring in. The 7 strategic and frontier sectors in which we've highlighted that will increase productivity and also have new investments come in and give emphasis for India's own brand on those things is on the biopharma sector. I think that's going to be a big change in the way in which we are looking at giving capacity for those who are able to research, who are able to undertake research and development. So 10,000 crore initiative again over 5 years for domestic biologics and biosimilar production. This is a clear message and backed with enough substance that India's lead in the pharmaceutical sector should be kept intact, but at the same time bring in newer ways of helping the pharma sector, and also because it has an impact on human health. Semiconductor mission had 2 major announcements that will improve the India stack and also the IP related matters. Electronic components manufacturing scheme for 40,000 crores is a major encouragement for electronics to become self-sufficient. We have also announced establishing rare earth corridors so that India can face and be able to meet its own requirements with its materials. So once we identify and are able to explore these minerals and process them, make them available for us, our dependency on external sources for bringing in the rare earths will be lesser. And we've identified the states where we want to establish this rare earth corridors. They are going to be in Orissa, Kerala, Andhra Pradesh and Tamil Nadu. So these are very important developments, and they are going to have multiple decadal impact on the Indian economy. Our dependence on magnets and rare earths will be brought down. 3 dedicated chemical parks, again for reducing our import dependence. High-tech tool rooms for research, that will be set up in 2 locations. Very important thing is about the construction equipment being imported. That could be for building tunnels or metros or high energy and also heavy duty equipments which we are relying on imports. We want to manufacture them in India, and that is why I said, how does it affect a common man? It affects because firefighters today have novel, new, big ticket and small, very small firefighting tools and weapons or equipment. We don't have them in this country. That's why if there is a fire accident in some very congested area, our equipments are not able to reach those points, whereas there are equipments which today are produced abroad. which can navigate those small corridors and go save people's lives. Whether they or huge ones, all of which we want to make sure that we will have production in this country itself, whether they are tunnel boring or anything else, from small to big, we want to bring in those very impactful infrastructure into India. So we'll support domestic manufacturing. Then container manufacturing is another, which we'll support. I think I've gone in detail talking about the textile support in various forms. One very important announcement was made, Mahatma Gandhi Gram Swaraj initiative, which will make sure khadi, handloom, handicrafts will all be brought in, and one district, one product will all be brought in this initiative, and we'll be able to support rural artisans, rural workers, and handloom weavers in those areas. Legacy industrial corridors have got saturated. Manufacturing happening there is now very constricted because they are not able to bring in newer robotics and others. So we want to upgrade these legacy industrial clusters so that they become cost competitive and efficiency comes into these places. Even more important is the champion MSMEs, small and medium industries, entrepreneurs, MSMEs, who are going to be given all the supports, and three-pronged approach is being taken up there. We are giving equity support, we are giving also liquidity support, above all professional support for them, so that MSMEs, the equity support is supported by a 10,000 crore SME fund, growth fund. Above all, we are also topping up the Self-Reliant India Fund with 2,000 crores. So MSMEs should not feel any dearth of resources for equity. Similarly, they shouldn't feel any difficulty for liquidity in their hands, because the TREDS platform will now be treated almost as a backed up, security backed up instrument with which they'll be able to discount and get their monies. For professional support, we're working with the Chartered Accountant and Cost Accountant Institutes so that they can create corporate mitras who can help these MSMEs in filing their returns, doing their accounts, and so on. Above all, for youth and training, there's so much. You've heard the speech, so I won't want to take your time on it. High-powered education to employment enterprise, standing committees being formed, so that they can recommend measures for service sector as a core driver of Vikasit Bharat. Part B concentrated a lot on tax and related concessions that are being offered. More importantly is the process simplification which has been announced. So elaborate measures have been taken. You will be able to also seek clarification if you want. New export opportunities for fishermen who can go into the economic India's zones, high seas, and also assess and access the global markets. The one very touching, and I really was moved by this proposal, is where we have identified 17 drugs or medicines which are going to be basic custom duty exempt, which are important for cancer patients. Similarly, 7 more rare diseases are added to the import exemption list of the import duties. Baggage clearance and personal items which you bring in when you travel are all being given enhanced duty-free allowance. Besides that, there are quite a few direct tax and indirect tax proposals. Decriminalizing the penalty proceedings and support to the IT sector are some of the high points. As an opening remark, I'll conclude here. I'm sure you'll be able to ask questions and seek clarification. Thank you for coming.
Thank you, ma'am. I'll start this question, taking the questions. First question is 17.
Good afternoon, ma'am. Shishir here from Hindu Business Line. Ma'am, my question is that under the miscellaneous capital receipt, the provision is 80,000 crore rupees. And last year, the provision was 47,000 crore, which has been reduced to 37,000 crore rupees now. Does this mean that there will be more equity monetization this year, or there will be more focus on the asset monetization of CPSEs?
So you've got it rightly. The intent is that we will have a very strong asset monetization plan in place. Last year, ma'am had announced in the budget that there will be a pipeline prepared, which is being done. So we hope to reap the dividends from that.
238.
Ma'am, Timsi Jaipuria, this side from CNBC TV 18. I just wanted to know the rationale behind the hike in STT in futures and options.
So, first of all, I believe some confusion. In fact, the question that you have asked rightly reflects the announcement itself, that the only change made in STT is in the future and options. All the other STT rates remain the same. The primary objective of raising the tax rates on STT has been that it is felt that when you look at the volume of transactions in futures and options, whether you compare it to the size of GDP or size of the underlying securities market, it is largely in the realm of heavy speculation, which results in losses to small, retail, unsophisticated investors. And the government's intention is to discourage speculative tendencies, and the increase in rate is essentially in that direction. So it is meant to essentially handle the systemic risk in derivative markets. Even after this increase, however, the rates of STT will remain modest compared to the volume of the transactions that is happening there. This is the reason.
54.
मैम तरुण शर्मा फ्रॉम जी बिजनेस। मैम आपने पूरा बजट जो है वो न्यू एमर्जिंग सेक्टर पे बड़ा फोकस रखा है। मैम मेरा सवाल आपसे दो हैं यदि आप अलाउ करें। एक मैम आपने जो एक्साइज ड्यूटी का कैलकुलेशन किया है वो पिछले बजट एस्टिमेट से इस बजट एस्टिमेट में तकरीबन 22% की ग्रोथ देखने को मिली है। दूसरा मैम जो आपने एमएसएमई के लिए कहा कि जो ट्रांजैक्शंस होंगे उसके लिए आप एक्सचेंज प्लेटफॉर्म का यूज़ करना होगा, तो क्या मैम ये सीपीएसईज के लिए कंपलसरी होगा जो डिस्काउंट ट्रेडिंग की जो बात है? थैंक यू।
I'll take the second question, ma'am. So, हाँ, ये CPSEs के लिए मैंडेटरी होगा कि डिस्काउंटिंग एज वेल एज नॉन डिस्काउंटेड बिल्स दोनों को ही ट्रेड्स पे करना होगा ताकि वो 45 दिन में भुगतान एमएसएमई को कर पाए, और ये हर तरह से चेक कर लिया गया है कि ये हो सकता है। सो वी वांट टू मेक CPSEs एज पायनियर्स. We hope, like ma'am has said in her speech also, that other corporates will also follow.
On excise?
Increased by 22%, sir, from last year B to this year.
Because there is from 1st of February, all the tobacco products have come back into excise, and all those revenues will account for the increase of the next year. 209.
Ma'am, Prakash Predashi from ET now. The budget has announced restructuring of PFC and REC. What will this restructuring look like? And does this also mean that these NBFC will be merged going forward?
What is the later part of your question? That these NBFCs are not going to
merged going forward?
Yeah, I've said we are rationalizing it. You will get to know as we go forward. We want to streamline it, and therefore we will be taking some steps. We'll let you know the moment we decide how to go about it.
234. Hello, ma'am. Harsh Kumar from Business Standard. Ma'am, two questions. One is, you said that a high-level committee will be formed on the banking reforms in order to 2047. Are we going further for
any kind of merger or something, since government is continuously saying that we need at least 2 of the big banks, at least of the top 20 banks. So are we going towards that?
No, first of all, when I say that it's going to be a high-level committee which is going to look into it, the terms of reference will be prepared, and we are looking at committee to go into the entire expanse of the banking sector so that they come up with recommendations which help us to plan for banking for 2047. We need, by the time we become a Vikasit Bharat, 2047 is our goal. We need to understand what are the other steps that we need to take in the banking area, and based on the recommendations, we'll go forward. But we have the Secretary, Department of Financial Services. We'll ask him to also give us, please.
Ma'am, I think you have rightly responded. There are a large number of aspects relating to the banking requirement. For example, the credit to the GDP, commercial credit to the GDP ratio low, and the expansion of the banking network, and what kind of procedure currently we have that is impeding both the deposits as well as credit. All those aspects will be looked at by an expert panel, a committee, and well, we will definitely have TOR, and then also consult the all the stakeholders, and the government will take a view on how to lay strong foundation for 2047 Viksit Bharat.
Ma'am, one more question. 229. Left side, yes.
Ma'am, Premanshu from Ananda Bazar Patrika. Ma'am, have you consciously avoided announcing any bonanza for the poll-bound states? And secondly, can you elaborate on this East Coast corridor, industrial corridor you announced?
See, the industrial corridors are very critical for supply chains. We need a predictable mineral, rare earth and magnet related products to be made available for India's manufacturing. Whether it's lithium ion, whether it's automobile sector, whether it's the new age solar, you need these rare earths to be processed and be made available. We have enough raw materials. The coastal areas are rich in these minerals. And therefore, states also felt, I mean, I must credit that the interaction that I had with the finance ministers pre-budget, many states felt that there are rare earths which they can utilize. We then sat up in the budget group that we have, Revenue Secretary, Secretary DA, and thrashed out, talking with the states. What are the kind of things that we can do so that their capacities to extract these minerals, process them, make them something which the industry can benefit from. So India can be less dependent on imports of these materials. That is where, having spoken to states, we thought it's very important to recognize the corridor and give a policy for it so that industries can invest, private sector can come in, governments, state and center can come together on it. That is where these corridors were announced. And looking at the success of the defense corridor, I can confidently say these rare earth corridors will make that big a difference to the Indian economy. The first question, I think there's enough to cover all the election states. If I do, you will ask me, why have you done it only for the election states? Now I've done it for election and non-election states as well. You want me to spell out what has been done only for the election states? I'm quite happy to do it.
262, front. At the front, please. Here, front side. Front row.
Good afternoon, ma'am. Sapna Das here from CNBC TV 18. Two quick questions. Just wanted to understand the gross borrowing at over 17 lakh odd crore. Would the government look at it as being on the higher side? Just asking that. And within that also, if you look at your net tax revenue stream, of course, B to RE, it's higher. And a lot of concessions have been given away both on direct and indirect taxes. But the trend seems to be a bit flat, around 28 lakh odd crore. So if you could explain to us, how is this entire thing looking? And second, ma'am, in terms of the disinvestment aim, 80 or 1,000 crores, would this also include IDBI stake sale sometime in FY27, ma'am? Thank you very much.
So you've covered a number of secretaries all at one go. So on the borrowings, no, we don't think it's on the higher side because the net market borrowings are in the range of 11.73, which is been plus around that number for the last couple of years. The larger number is because we have 5.5 lakh crores which have to be repaid this year. So to that extent, we don't think that it's a large number. We have a plan how to manage this, and according to that plan, which also gets released from time to time, the markets would also know, as well as all of you want.
Okay. So, on the tax stream, because of some concessions that were given this year, there has been some course correction. But if you look at the next year, the direct tax is growing at 11.4% and continues to be 3.1% of the GDP. The total collection would be 6.9%. The indirect tax excise is growing very healthily because of the base correction. I mean, the base which has got added. Customs too is showing a decent buoyancy. So on the tax revenue, I think we are looking up. And even GST, as you would have seen the collection figures today, after rate rationalization, the buoyancy which we had expected, and in this hall we had discussed about it, you can see that coming back on that tax.
Hi, ma'am. Meghna Mittal from Money Control. The fiscal deficit target that we have set for next year from 4.4 to 4.3 is being seen as very, very gradual. Is there a specific reason, or is it because of the global uncertainties as one of the major factors for being such a gradual fiscal consolidation path?
I would have thought you'll appreciate it being gradual. Because particularly fiscal, drastic changes don't go down well. One or the other section gets hurt. We will have to be gradual, but yet keep it well within that band which gives confidence. And to show that we care for fiscal prudent management. There's no point in me dropping it to, let's say, 4. It has to be steady so that the economy goes in a steady speed. So it is a responsible number and realistic number. It's not as if I wanted it to be so gradual. It is a responsible number. We should achieve it and equally not bring in any kind of turbulence anywhere.
Thank you. From the center flank, 190.
Thank you and congratulations on a very comprehensive budget.
Before you start, I was going to look at PIB and say this side is being ignored.
Yes.
But good that we called you.
Thank you. I'm Aprajita Saxena from CNBC International in Singapore. I'm very curious because you started talking about tech, and I want to ask a question about the ISM 2.0. There are those on the outside who say that India sort of lags when it comes to AI innovation, especially innate innovative LLMs. Is the strategy of ISM 2.0 to sort of become part of the global value chain, or are you more positioning towards India creating its own native LLMs? Thank you.
I think Ashwini Vaishnav, the minister, has been speaking extensively about this. There are several aspects of it. We want to be sure that in the semiconductor domain, we have every expertise for all those 5 major chip or modeling or, the infrastructure, design, every aspect of it. So he is talking about creating capacities within the country to be able to have that kind of a infrastructure well laid out within the country. And similarly, if you're looking at the way in which our startups are working, using AI, and very clearly we have also shown a path that it is not just the large language models, but also smaller ones, medium-sized ones, which can serve the requirement of your economy. So AI in India, particularly when you have a huge demographic dividend, will have to give us results to ensure that our people have work and also the opportunities are going to be enticing enough for the youth. It cannot replace human efforts. So we are at the same time redefining for ourselves, if I may use that expression, on how to use AI, what is the capacity that we have to create, the kind of infrastructure that we have to lay in the ground for it. Equally, the products which come out of it will have to benefit our people, because our youth are revving to do more and new. For them to do something new and for them to do something more, we have to create benefits out of AI rather than, push along with AI unthinkingly that it doesn't serve our people. So I think these many different factors play in making a decision on semiconductor. And that is why ISM 2.0 looks into these aspects as well. And I'll ask the CEA to speak a bit on it, because he spent a lot of time so that he could write effectively capturing what's happening down. Ananta, you want to say anything on it?
Actually, we have to see the semiconductor mission and the announcements related to the rare earth corridor, which ma'am talked about a few minutes ago. All of them as part of the framework that we presented a couple of days ago here on the strategic resilience part. So, in fact, many elements of this ma'am's budget speech focus both on equipping us to handle the AI-related technology as well as skilling the population in areas where they can be immune to some of the AI-related impacts as well. So it covers both dimensions, and therefore the semiconductor mission, the rare earth corridor, and also some of the Part B announcements ma'am made about the various electronics and manufacturing sectors were all part of the initiatives to make sure that we make ourselves strategically resilient in a very fraught global environment.
138 at the back side. Yeah.
I'm Rishabh with NDTV Profit. Just wanted to ask on the buyback tax, the rationale behind it, because was it essential to do it now? Because in 2025, there were a lot of companies that came out with significant share buybacks. Also because, and also do you foresee some sort of a reduction in buybacks? And secondly, on pollution-related schemes, the outlay has been very stagnant, but pollution as a problem remains. Is this not a policy priority for the government now?
On the buyback, I'll have Revenue Secretary brief us.
So first of all, on the buyback, I'd like to clarify. I hope that the point was clear enough in the speech also, that it is in fact a relief. It's not a tax, additional tax. It is a relief. Buyback tax system was changed to make it as a dividend income, which is income at the applicable income tax rate at the hand of the shareholder. It has been corrected now, and we have put the tax to be in the hands of shareholder as a capital gain.
Investment Guru Steps will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. Co-powered by Purvankara, the art of development celebrating 50 years.
Hello and welcome. You're watching the collab show between Business Today and India Today Television. This is the market closing show. Last 10 minutes to go before the market shuts shop. It's presented by NSE. Let me quickly welcome all our guests joining in. Saurabh Mukherjee, founder and CIO, Marcellus Investment Managers. Swaroop Mohanty, CEO, Mirai Asset Mutual Fund. And we also have with us Dheeraj Relly, MD and CEO of HDFC Securities. Welcome to all of you. Thank you for standing by. The Finance Minister just took some of the questions from media on the budget that she's presented. So coming to you first, what do you think is the key reason why the markets are disappointed so much? 2% down for the Nifty, 24,800 has been given up. Is it the disappointment on STT, or is it the disappointment of some more announcements that have gone missed?
I think the market had unrealistic expectations going into the budget. We're living in a country where dollar EPS growth, right, is close to zero now for 2 years, and the market trades at 20 times forward, right? So you can just just to give you a sort of headline view of how unrealistic views are. Earnings growth in rupees is 5%, in dollars is barely anything. The market trades at rich multiples compared to any other country. And therefore the unrealistic nature of expectations meant that they were more likely than not to be disappointed. I think the FM hasn't done anything wrong. It's a good budget. It was a high time that FNO taxes were increased. I've been shouting myself hoarse for the last couple of years that this doesn't make any sense. We have 1 trillion rupees of speculative activity in FNO markets. Much of that money is ending outside India, as smart algo traders on Wall Street take retail investors in India to the cleaners. I'm glad that the FM has decided to tax that activity at higher rate. It's basically a sin tax. It's a good idea. And the second, I think, positive thing she's announced is a big review of the banking sector. I don't know exactly how the review will play out, but unless the FM wants the repetition of the status quo, there is possibility that the review of the banking sector leads to more foreign capital, perhaps more foreign corporate capital also entering the banking system. More capital in the banking system is much needed given where we are with many of our smaller banks struggling with profitability. The only negative I could spot was this obsession about jacking up capex, which obviously results in more borrowing in the bond market. I think tomorrow morning when the bond markets open in India, we'll see bond yields going up. And that's unwelcome, especially since the CE has said, the chief economic advisor has said, India needs cheaper capital. I'm not quite sure how the government borrowing more money in the bond market is going to reduce the cost of capital for the country. But in difficult circumstances, a decent budget. I think the market being disappointed is more the market's own unrealistic expectations than anything that the FM has done.
Right. Let me come to you, Dheeraj, and quickly ask you as well, what stood out for you in this budget and where do you think the finance minister could have done more?
I think this budget is a more nuanced and fine print oriented budget rather than, big bang reforms. We've seen government continuing to focus on the capex side. I think that is good because India is a infrastructure deficit country and capex has its own repercussions on the employment and growth also. So to that extent, I think more or less FM has ticked all check boxes, no big bang reforms. Yes, STT increase in FNO have been a dampener, and I think this is a knee-jerk reaction in the market. Maybe there for a couple of days, and then markets will move on from here. But I think FM could have done better. My take is that we have good enough of assets available with the government to monetize. I don't know why they are reluctant to monetize the assets, because with that monetization of assets, they can get funds and they need not to borrow more from the markets. So that would assuage the concerns Saurabh was pointing out. Government is sitting with a lot of assets and they must look at monetizing the same. They can also reduce their stakes in some of the PSU banks also. Hopefully the high-powered committee, sustained committee could work in these directions.
Okay. Saurabh, to you as well. On a scale of 1 to 10, how would you rate this budget and what adjective would you use to describe this one?
If you just take out the stock market perspective and look at it from a broad India, destination or path story, I would rate it 8 to 9. But at this moment, it's completely wrong to discount the stock market at a time when people are abandoning India with the quantum of money that's going out. That was a message being given to the country, and I'm not against the implementation of STT, but I think it could have been avoided at this moment. Please understand, today the FIs are not at play in the market. We'll come to see the full impact tomorrow. And see, there is a lot of noise on the world. We can ignore that noise and continue our path of fiscal prudence, which the budget has continued, which is, I think, controlling the controllables. I think when you look at the broad budget, I think the focus on that has been a standout. A lot of factors which the world was screaming out, because the world's divided into two parts. Again, speaking from a stock market perspective, there's an AI world and a non-AI world. Yes, we've addressed our intent to be there through data centers and semiconductors. years. That's an intent. Time will tell whether people will take that bait. Now, the concern for the country has been private capex. The government cannot be, ticked anywhere out of 10 on its intent on public capex, which it continues. This is a phenomenal budget, but time will tell whether people will take the bait on private capex. The other part, which is very significant for me, is at 9% unemployment, this budget also lays down the ground for the beginning of employment across sectors. Which these were three things which stood out for me. But ignoring the stock market, we'll come to see the full impact tomorrow.
That's where the impact is. Okay, Saurabh, to you as well. Do you think this budget has done enough on two accounts? Taking a leaf out of what Saurabh also mentioned, Swaroop also mentioned, and that's as far as the private capex is concerned. That's been subdued. We've seen only the government doing all the heavy lifting. Will it finally pick up? And second of all, will FIIs come back that have been awaiting us?
So, two aspects to understand on private capex, right? A promoter of a private sector company looks at demand. If you have tax revenues growing at 3 to 4% in a country, if you have capacity utilization at 70-75%, right, but demand has been weak for a couple of years now, job creation in the private sector is anemic, real wage growth in the private sector is negative. Difficult to see why a promoter should press the back button on capex. After all, he or she, the promoter, is a profit-oriented creature, and if he does not see the ground level economic activity to justify private capex, I'm not so sure what the FM can suddenly do to trigger private capex. So I think that's the first piece. It will be a while before we can see private capex, because job creation, private sector job creation, especially white collar job creation, does not seem to be happening at this juncture. Coming to FPIs, or let's focus on FPI money, the point that Swaroop was saying, where FPIs are heading for the door. The FPI's bone of contention is very simple. Their point is, look, you're one of the few countries in the world which taxes us at destination. Most countries have residence-based taxation. Most countries do not tax FPIs. We are one of the rare countries which taxes FPIs. When we were a country where earnings growth was in 15% or high teens, right, FPIs were happy to pay that tax. Now they're saying that there is no earnings growth in dollar terms. Valuations are rich, and yet you guys continue taxing us. And their point is, why should we therefore invest in your country? Now, I'm not the person to address that issue. I think it's high time that between now and the next budget, the government and the FPIs have a chat with each other and figure out a middle ground which suits both sides, because I don't see FPIs returning to India with the LTC regime that currently prevails for foreign investors.
Okay. Neeraj, coming to you. We just are a few seconds away from the market shut shop, maybe 1 minute to go, and we're already down sharply across the board. There's a broad-based sell-off. So the markets are clearly unhappy with what the budget has done. But for an average retail investor, from tomorrow, what is the strategy you're advising them? Is it back to earnings, back to tracking those companies which are, tracking with profitability? How should one be really understanding what their strategy should be post this budget?
One thing they can do is to relook at their portfolios and try and optimize their portfolios in the sectors where we see better earning growth. Because ultimately, budget or geopolitical issues, these are more bigger noises only, and they'll have to, focus on the earnings. And we can safely assume that FY27 will be a better year for earning in terms of quality of the earning, and overall earning should be better. That's what our estimates are. And that's where we believe that they can look at the sectors which are where we have better potential for earning. BFSI is one space they can look at. I know PSU banks and some of the banks got hammered today, and capital market stocks are also hammered. But my take is that BFSI is one strong sector. And with the impetus given in the GST 2.0 and last year relief in the taxation and no tweaking this year, I think the benefit will continue, and that continuity should provide more money in the hands of Indians, and that should pay well for the consumption related stocks. And now that they haven't seen the volume growth, they have been riding only on premiumization in last few years. We're hoping that the demand will pick up in the next fiscal, and that's where consumption oriented stocks and low cost discretionary stocks should do well.
Okay, let me quickly just wrap up the markets and come back to all of you. 24,825 barely moved up above that 24,800 mark, but ending 495 points lower on the Nifty today. The Nifty Bank also has seen a sharp fall in today's trading session, viewers, especially led by the fall in the PSU banking story, 2% down, 1,193 point of a cut on the Nifty Bank. All the sectors have slipped into the red, barring just minute gains on the IT sector today. It's the India VIX that shot up almost 11%, indicating heightened volatility in trade today. Look at what the metals are doing. Last couple of sessions, we've seen heavy sell-off, and it again ends with about 4% losses in today's trading session as well. PSU banks are coming under heavy pressure, something that Dheeraj was also marking out, that it's the borrowing that the government has indicated in the budget, a record borrowing of over 17 lakh crore rupees, and that's creating some pressure there. Look at the defense stocks. There has been an increase in the outlay, but you still see the index down by 5% in trade. So it's an all across the board sharp sell-off that you've seen in the markets today. A lot of those stocks also getting under pressure. Let me come to you, Swaroop, and try and understand, what should be an investor's understanding of asset allocation from here. Up until thus far, people were riding on this entire FOMO of gold and silver, jumping onto every opportunity, riding it high. But bang comes the sharp correction, which anybody of us would have anticipated, but not so sharply in just the last 2-3 sessions as to what has happened. For those investors who were heavy on gold and silver, what would you advise? For those under equities, what would you advise?
See, my smile was whenever I hear the term asset allocation, a smile comes to my face, because asset allocation only happens on Twitter. In real terms, people buy last 1 year returns. If you're talking about the frenzy of gold and silver in the last 6-8 months, there was a frenzy of small caps prior to that, right? Till that is not corrected and investor behavior does not get into future thinking, asset allocation will not happen. That's the truth, right? And so there are two types of people in the market. One is a buyer, one is a seller. Buyer wants the market to go up. The buyer wants the market to go down. The seller wants the market to go up. Now, anybody who looks at the macro of India, it's probably the strongest macro globally. As a decadal growth, if you see 6.5-7% growth consistently, is probably the most consistent growing country in the world. That's where you sit. I mean, as a buyer, I'm very happy that the market's where it is. I would probably top up my SIPs a bit and leave the worrying of which stock to buy to the fund manager. Once I give it to the fund manager, I would refrain from being a fund manager over the fund manager and keep it simple. Some of the valuations and what Saurabh actually referred to at the beginning is something which people should know. Whenever the market is in an overbought situation or overvalued situation, such triggers lead to a sell-off, and it will get into a far more realistic space and a good space for investors to be.
All right. Okay, we have time for a short break right here, but viewers, stay tuned with us. We are going to be continuing to decode the fine print of the Union Budget 2026. On the other side, stay tuned.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit! Visit! Visit!
SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange. 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 Presented by National Stock Exchange.